Good morning. Adjust your volume. It is it's August 3rd. Hope you had a good evening and a good morning. We're going to be streaming stocks, options, futures trading today. Looking at some technical analysis, watching the charts. We're in earnings season. Just got a downgrade on our credit nationally. Thanks for being here. Sub up, like up, comment down. Happy Money sticks around. You can also follow us on Twitter at HappyMoneyYT. And join us on our Discord server. Link for both those are in the description. I've pinned Discord in the chat. Thank you guys for joining this morning and for your hasty thumbs ups already. Stream. 9 of them. Well done. We're about 15 minutes in. Might have a bit of a gap down. Still in the same trend. Got some runners, some earnings plays, some halts already. Good morning, Mo Lava. You reclaimed your spot. Numero uno. GME's up 1%. Good morning, David. Morning, Cameron. Yeah, TTO has been ripping. No work. Hey, Tree. Can't buy coming just for the NOLs. I've heard that's true as well. Good morning, Tasty. What a profound statement this early in the morning. Ace. What's up, Pick 6? Guten Morgan. We've got Wayfair with a gap up. Earnings. Not sure. Root must be earnings as well. Run is earnings. TTO is just easy. Let's see. We've got cost is down 2.6. No band. Hoping it holds that trend. Rotaire is actually looking good again. I like to see it over this level. See if we can get some sort of rippage before its earnings debut. And Radical is down 3%, but it's bouncing on that 61.8% retracement. So a good sign so far this morning. Still like it. Not happy for the TTO call me back. I mean, I heard it from you guys at one point. So yeah. Shout out to the chat. But it's not about being right. It's about being right on time. Let's see, Mullen. Is this an appropriate morning to be talking about being on time? I'll let you decide. I will not be coaxed back into you, Mullen. I'm excited for Rat. I hope this continues to materialize to the play that we know it wants to be. Teledoc's it's bounced on that 61.8, maybe. It's been kind of a letdown. Won't be a letdown, Teledoc. Be a letdown. Okie dokie. What should we sell this morning? I start selling some stuff. Neg looking. Not the best. G's taking too long. Zoom is back in its kind of range there. It's not great. Mullen has Investor Day? Yeah, we saw MSGM was halted earlier. Best I could do is next week. Alright, SPY, new high of the day there. Not taking the trade at this point. Need to wake up. IBRX looking good. Looks halted. Maybe. Barbecue's flat. Orange Skrelly. AI LM based. Interesting. GME's up 1%. Be sad if that move on RAD was just a one-day move. Confluent had earnings, they're up 9%. Buys climbing up here a little more. To the high of the day. Looking over my plays here. Hadouken! Zim is up a tiny bit. Calls are up a little bit. There you go, SPY. SPY's reaching. ETOO. Back up to VWAP there. SGM. Check my notes. Janorak, yes. Had a nice sell-off after earnings. look at it for continuation. This Fresh is up 20. We'll have earnings? No, tomorrow. Climbing up a little bit. I don't want to get some more rad calls. I like how it's holding. I am root. What do you mean MSGM's T+2? It's a Thursday. T+2 from Tuesday? You're talking about next Tuesday. Are there even options on it? There are options on it. These are so far out of the money that you're not going to get any kind of squeeze from these. I don't think. How is that a 0.24 delta? $2.50. Weird. Yeah, I think that's broken. Unless you're talking about T+2 something else. Barbecue sauce is flat. If August is enough time for Brad. Cancel that order. Spy reaching. Reaching for the highs. $18th by August 12th. Yeah, it's on a downward path. Go boom to the upside. Aloha, Maui Sam. I said about 30k in SPQ. Is that a large cap blend ETF? What? Siren large cap blend ETF? I mean. SPQQ. Thanks, Guts. You too, man. Root. ESQ. Short the Qs? Genius, using an inverse leverage ETF. For those of you that only know how to go long, you should buy PSQ if you want to go short. Fubo's up there. Let's see what's Goodyear. I like Goodyear for the long term. Doesn't matter what car we have, got tires on it. Like that bad earnings. That's good. Don't know why. Nerd's wallet sold off. I don't know why Nerd's wallet dumped. Wonder if this bomb's gonna fall out on Nerds. Like a Head and Shoulders. Top hours down 10. 50%. Retracement from the high. Barbecue's down 2.3. Rad's climbing up a little bit. Went down 2.5. Terra's up 2%. Like to see it above here. Yeah, data. 10 o'clock data. Volunteer up 1.2. Each on PayPal. You asked like 2 days ago. Oh wow, there you go. It's because they didn't do it before earnings. I would wait. I'd still wait. There's probably gonna be some earnings continuation to the downside. I mean, this thing's still in a downtrend. You know, it's starting to break out here. But now you have it back below there. I'd wait for at least that to break to the upside. Now you had bad earnings, so I mean this could keep coming. I just set alerts. Set alerts for like lows. You don't want to look at it. See what it does down here at like 60 bucks. Then set an alert for, I don't know, 70. It's 70, pick it. Depending on how much you want to get, you can always start scaling in, but yeah, day after earnings, I mean, don't usually just bounce straight back up. Oftentimes it'll either settle or it'll continue that trend for, it could be till the next earnings, honestly. You know, we've seen that oftentimes. If it's good earnings and it rips, it could just keep rallying, you know, with consolidation stuff, but literally until the next earnings. So some stocks move just earnings to earnings. Etsy's down. What you could do, well, if you want leaps, you want leverage, let's say cash secured puts, look into on PayPal. Maybe it's not too bad. It's pretty low actually. Yeah, it depends on your strategy. If you do want it long term though, you could sell these puts. Into Cheetah. Back in it. Ross down 2-2. Terra's up 3-3 now. Very small position in this. Tune broke some resistance, up 1.9%. Yeah, it's on the march up. Looks good still. Yeah, it's starting to break through this resistance you're talking about. I got a whole area all the way up to like 2.5. I have the alerts. Ace, you're long on Palantir into earnings, is that right? Etsy's another one. All these larger cap ones, the options premium usually isn't that good. That's not bad. 46%. Good, took a dump on their earnings. Heels Up is down, SNMP is down. Barbecue's down 1.2 still. GME is green 1/4. Quarter green, TTOO, breaking out to the upside. A little bit above VWAP at least. Wayfair is breaking out. That's a big break on Wayfair actually. I might look for a long on Wayfair. Maybe on a pullback. Even with IV Crush, like you could have gotten calls today and they would have been cheaper potentially than yesterday. Depending on strike and expiration. Let's see here. I do like that Wayfair chart though. Pretty extended. I'm gonna put a note. Might look for it maybe tomorrow. For that earnings continuation. Raging Bull, you covered your short. You said you're gonna hold it till September no matter what. Too good of profits, gotta take him. Neo's up 6. High's coming down here a little bit. Back to VWAP. An engulfing candle there on the 5-minute though. Excuse me. All the T squeezes? I don't know, that's funny. Long planned or past earnings. ETOO ripping up there. Close to the high of the day. I am root of 19%. GME is now flat. Barbecue's down 2%. Grab some puts there on SPY. I like to usually trade this early, but I like the setup. I'll do a 10% stop on it and start taking profits low of the day. bottom falls out. $447.48. $444.91. So much more expensive this early in the morning. Rad. Climbing up a little bit. I just danced around VWAP there. Got a pretty tight stop on it. Given that we're at VWAP. You bought TTO in 2020? Can I have your autograph? Okay, SPY's slowly edging down here. Got a little head and shoulders though. It's kind of what I liked. But we're continuing with VWAP. If we do fall through here, we break the low. Guess we do have that line there. Not a whole lot really though for support below here. Market is already down 0.4. Climbing up. Tesla's up 0.5%. Kind of want to sell some more. Tesla. Barbecue down 1.5. Brad's moving up a little bit. Down 1.5 now. Also down 2.5. Is it for Terra? Terra fighting that resistance. There you go, Rad. Yes. About to go green on Rad. I'm gonna dump my Zoom calls. Too far out of the money. Not enough time. Taking a loss on them. We've had all these were up before we got that big engulfing candle on SPY. It just like shut every rally down, pretty much. Zim's still looking alright. Up 1.19. Okay, how's Dish doing? Dish. Dish has earnings coming up soon. Very soon. Hopefully it's stellar. Spy's coming down a little bit there. I'm not in UNG right now. It's just been consolidating for months, so I quit trading it, waiting for it to do something. It's basically at lows though. While I see demand decreasing, if you only go only gonna go so much lower from here, it does break the downside. But yeah, I haven't traded it since like this move right here. Once I think once we're out of, or starting to get out of the woods, I'll go long on that gas for sure. It's at a great price, but I want to see it break these highs. And I've been trading nat gas with the futures too, which I don't have margin for right now because I've sucked at futures lately, trying different stuff, and I've not found much success with scalping with futures. Where I've done better with it is like not necessarily swing trading, but even just day trading and just keeping it simple, like not scalping. Since you don't have like a leverage type move. It's leveraged, but it's like leverage with shares basically. So I don't know, I just haven't had much success with it. So I think maybe more for swings. Anyways, that's what I'll be doing with nat gas. BBBYQ found a little range at 65 cents. Barbecue down 2.7. Rad is green 5%. Here we go. Here we go. Should have gotten more calls. No, that's okay. I wasn't that down on them. I was down 30% on them, and now I'm up 30%. So it's just, yeah, like a deep discount. Top. Are you still holding top, Rally? Let's see. Up. 670. Yeah, if it falls through there. Yikes. Don't want to hold there, huh? Ooh, the conspiracy of the hidden dockets. The forgotten dockets. It's illiquid, just doesn't get traded much. My guess. I show a transaction here, 1024, 1022, getting traded. I look at the time in sales. That is neat. Looking for a scalp. Yeah, see if it bounces on that support on top. At a nice low level at least. Alright, let's see. I only got a few of these contracts. They're so expensive this early. But I shall skim. I'm not able to trade dailies on Fidelity. I have to trade tomorrow. They're not moving quite as aggressive. They're up 14%. What that compare to dailies. SPY's gonna shut down our Rite Aid rally. Rite Aid rally. Alright, I'm gonna sell one here. Huh? They requested to close and not found in the account. What? What? Did I not close it when I have a stop loss on it? Please, Mister. I can't close it when there's a stop loss on it. That is freaking bogus. I think I was doing that yesterday. This is so cumbersome trading on here. I'm trying to get my my other one on cash. Trying to do like scalp trading, and it takes 30 seconds to get in and out. Okay. Closed one. One of three. If you get a little bounce here, back up to VWAP. New low of the day there on SPY. Nice. We have kind of a resistance here from back here. After that though, we've got a bit of a void. Got a gap fill. How's this pulling things? Maybe we should sell. Radicals. Kind of a widespread because it's by 5-cent increments. Paid a pretty high premium for them yesterday. I'll keep them. It's looking good. If I use Active Trader Pro, I could set up hotkeys and stuff. But I just don't want to. Probably should. BBIG's up 5%. Buys coming down a little more here. TTO is ripping. Just hitting pre-market high. Buy's looking weak again. I might hold these puts for a bit. Not really getting that low day bounce. And now we're below that resistance even from before. Just a gap to fill. 446 is the gap. 446. Let's sell another one. Put a stop on my last one. Let it ride. I'll add to it if we get a little retrace with a nice setup. That's whack. You can't sell it when there's a stop loss already on it. Here's your bounce. Just dug a little deeper. You actually have an RSI divergence there forming as well. Even on next days, those are still like close to 30% on that little move. TTOO is ripping. Rip rally, broke the pre-market high. Wow. Brad, building up a little strength to break this resistance. Por favor. Yeah, close my Zoom calls. MSJM back to VWAP. ETOO still ripping. Got the daily here. I mean, there's like not a whole lot going on. Stock's just been on an escalator going down. 54 cents maybe. Here's your bounce on SPY. Maybe building a engulfing candle and an RSI divergence. Could be the bottom potentially. Utopia Squeeze never got with barbecue. Dirt? Yeah, there's an engulfing candle on the buy on the 5 minute. I also have that RSI divergence. Those are both bullish. Oh yeah, were you mentioned this one before? Wow. They have positive earnings? Yeah, I stopped out of my last call, or my last put there on SPY. It was a take profit stop. So, not bad. Happy with that. $82% on TTOO. Radical got resistance there. Back to VWAP. QuantumScape's down 19. Interesting, why did it gap down? Oh, stock offering. Wah, wah. Proposes stock offering 17 hours ago. Merely a proposal. I like that premium. By rejecting VWAP. Put a note. Buy stays below VWAP here, we might keep coming down to kind of build a little lopsided but kind of inverse cup here. It'll just be a big long retracement handle. However, we do have that RSI divergence and an engulfing candle, so it could just end up being a chop for a bit in this range. Someone you kind of do have to chase. I mean, unless you're watching something close or have alerts. You have scanners and have alerts, and then I mean, at some point you're gonna jump it in. Unless you're just holding a bunch of sketchy stocks. The ones that have big runs are typically because they've been down a bunch, so you have to get a good entry on it. or it's just getting back up to your cost basis. Wow, Nerds had quite the bounce off the low there. Interesting to me. Those options aren't very liquid. Huge spread. Why is that spread so big? PayPal's also interesting. I want to see what it does around 60 bucks. Etsy as well. Let's see, TTOO 77% hanging out. MSGM 25. Got GME down 0.25%. Barbecue down 2.3. Well, it's good to see Rad's holding up. Didn't break through it yet, but it did start to wake up with some volume there. Yeah, the borrow fees is elevated too. Could be setting up something. SPY above VWAP now. of building another right shoulder here if we don't break to the upside. Finding its safety in the VWAP. ETO consolidating nicely up here. Jacobs bought ALV, Sava, COGT, Kura. Was all agricultural. Really? That's good. Good info, Cameron. He knows how to trade him. Oh, this is a pharmaceutical company? Oh, snap. I mean, we know Saba. Avian Spy, 446 puts. What expiration? Bubba. These are all the same space, huh? Biotech. Yeah, it's all biotech. Agriculture and biotech. Diverse. Dailies. Alright. May the odds ever be in your favor. These are all biotechs. Barbecue down 4.2%. 25.50. Lies above VWAP now. Like to see a break up here. Maybe for the long. A little inverse head and shoulders. If it'll get up there. Not quite confirmed yet. So far it's just a chop. MACD did flip bullish though. RSI divergence is still there. My cough is still there. 80% on TTO. TTO. Ethiopi. Run's coming down. Still in the gap. Need a Red Bull? 6-month-old baby teething. The full moon. Yeah, that moon was pretty. Watch that thing rise. Yeah, it sounds similar to my night last night, Bubba. Dude, when did I get up? Up at 3. Back to sleep at 6. This is the way. Now kind of rejected our line there. Too soon for the long. When did SPY get half strikes? I don't remember that. Wait, what? On Fidelity, it shows me that SPY has half strikes. There's 44,750. How is that possible? It's not on Webull. And it's only that strike. In the world? Do you guys see 44,750 strike for, I guess it's tomorrow. Oh, there are some half strikes in there. That's so strange. I've never seen a half strike on SPY. They're getting so much volume, they have to start throwing in some half strikes. Crazy. Yeah, jump back into some puts there on that half strike. Give that half strike a whirl. See what it does. As it's rejecting here. World. Okay, SPY's coming down there again. See if it retests the lows. See if we break through it. This little inverse cup and handle potential. see. Egg. Wait on Neg. Give Neg a little more time. Brad's back down 2.8. What'd you do? Thing's weird, man. Gets volume and rips. Reminds me of something. Teledoc down 2. Just sell out a Teledoc. It's so good. Or just like 1 day earnings continuation on a breakout level. That's it. I'll hold Sim, it still looks pretty good. Dish has earnings. Yo, was coming down to VWAP there. Eyes rallying back up a bit. Look at that VWAP. So weird. Yeah, stopped out of that short. Wait. Oh, now Spy's waking up. Barbecue's down 3.8. GME is green. Still just kind of in a chop. I have to wait for more confirmation of a move one way or the other, which gets stuck. Brad's kind of consolidating this channel. Good to see. Heavy is high on this thing, man. I'm gonna sell covered calls. Alright, I'm reinstalling Active Trader Pro. No we, Cameron. But let's look at it. $3.5 billion free float. I mean we. Huge. Hey Sterling, 3.5 strikes? I don't know, Kyle. I'll type in your name, see if that's sticker. I mean, going to OTC is usually very bad for stock price. So you'll get the volatility. At this point, you're flattening out, settling down. So that's what you want to see. I probably wouldn't. If it was me, I wouldn't close now. I would close if it broke this low, though, because it is a bear flag. But you could start rallying up from here. Now that the selling has stopped, basically. Barbecue is definitely an outlier. GME's up 1%. Look at you. Alright, SPY's moving up there. Okay. Okay, let's see what SPY does. Excuse me. Like the hit. Stream the share. Bridge loan? New house? Dang, dude. The rough time to be buying a baller house. Sometimes you'll see squeezes in bankruptcy. For whatever reason. And OTC stocks in general. They're more risky though. No question. BBBYQs sell only. Yeah, I mean, BBBYQs fundamentals don't look good. Seems like they're shady and they're trying to just cash out, basically. I haven't looked too much into it, but not submitting filing on time. People are quitting, selling shares. It just seems like sketchy business. We're kind of building this inverse head and shoulders now. See if it bounces on some support here. BBBYQ might be a little higher where that line is. Barbecue down 2.7 still. GME's green almost 1%. So now we'll just look to see if it kind of holds this level. Why is it so melty? Mm-hmm. I might be about to break out here. Looking for maybe a bounce on closer to VWAP. Preferably. It's gonna take off anyways. SPY is climbing up there. See what happens high a day. There goes the SPY. I've got this cup building. See if we get a rejection on the high, a little handle. Started with this RSI divergence down here. Brad's hanging out below VWAP. GME's up 1.2. RPU's down 3. CTO's hanging out 71%. There's a high of the day on SPY. A bit of a retrace now. There's SPY ripping through the high. Starting to fill that gap. Barbecue breaking the low on that barbacoa, down 6% now. Wayfair staying strong, 21%. Like run is starting to bottom out here. Confluence held up strong too, 11.5 on that. On their earnings. We're getting our handle here. Rivian puts? Depends on your play and your time frame. Talking about for earnings? I really don't have any insight on their earnings. I have Rivian put leaps, which haven't done very well for this rally. Bearish on it long term. Don't know when that will happen though. Maybe soon, with the market kind of turning around. Mullen. Maybe. Good call out though. Poison. 15%. Yeah, I was teasing us this morning with that 4%. Very teasy. Broke out of this downtrend we have. Made the inverse head and shoulders. I didn't like this low though. However, looking better now. These highs have not been broken. Boss Energy's up 5. That is neat. Boss Corporation's down 1. Terra down 2.8. Uh, 205, 2.1. Yeah, I think it could. Did 2.05. Could still get another bounce off of this level. Move a bunch of vehicles, put up a fence. That was fast. You move vehicles and put up a fence? You just move the vehicles. Bankruptcy squeeze. Yeah, I mean, that's one way to squeeze bankruptcy. That'd be squeezing out of bankruptcy. Getting uplisted. Other times I think it's maybe shorts closing. Just because whatever. Or just any rumors of good news and you have this massive short position. Then you have some shorts closing there. You have 10 of them expiring tomorrow? That's before earnings, isn't it? Oh, it's just a little weekly. Well, I don't know if it's gonna come down. Market's looking like it's ready to bounce. BBIG is up 8. Yeah, there's Mullen 14%. There's a first little resistance on it. 14 cents. Barbecue's down 4.2. What? Tupperware? Tupperware bouncing. Is that all today? Yeah, Tupperware's up 10%. Perfect bounce off that 50%. Look at that. Want to go long on top? Maybe your shot. Hasn't quite made it to this trend line yet. Still good. Line's coming down a little bit here. Mullen holding right below that resistance. Rat is now green. Back to green, 0.5%. Thousand degrees in New Mexico. Bye. Yeah, we're still waiting for it to break out that resistance. That does have a nice little gap fill up there. Doesn't mean it's going to happen though.
Reported its earnings this morning. They are still that launch of the RSV vaccine. That'll be for 2024. Hartaj Singh is with us, equity analyst at Oppenheimer. I'm glad you're with us today. It's only in the last 24 hours I've seen a resurgence here in New York of COVID. We were about to say for names like Pfizer and some of the pharmacies and all that, COVID's gone. There is a bit of a resurgence that has happened. What's your takeaway from what you heard from the earnings?
Nicole, thank you again very much, first and foremost, for having me. I really appreciate it. These earnings were interesting because, I think a lot of people expected them to be sort of a little bit ho-hum for Moderna. They had indicated they'd have all-time lows in sales and earnings. Their OpEx is going up. And we won't really know much about COVID-19, vaccine sales for at least another quarter or two, what that looks like for them and their competitors. I think Pfizer was sort of mum on the issue a day ago. But Moderna actually perked things up. They gave a lot more visibility. Their chief commercial officer, I think, delved more into what is possible for Moderna going forward. Of course, a lot of it depends on vaccination rates for the rest of the year. They're hypothesizing about 50 million to 100 million shots later this year, early next year. But they gave I believe, a more bullish than expected summary. They think they can do 6 to 8 billion in sales, which sort of brackets consensus. And then just some of the details that they gave around it also seem to indicate that they had really done their work, both from a clinical, regulatory, and commercial perspective. So I think that was what probably was the key takeaway here from this call.
Yeah, I think, you also talked about this pipeline and how the variety that they offer, from flu to cancer, RSV, there's so many other things that can help to propel this stock and keep it afloat. Where do you rate this company, Moderna, compared to some of the others? I mean, for example, Regeneron is a winner in the S&P 500 today. Do you have buy ratings, strong buys on any of the names in the group?
Well, Regeneron, we do have a strong buy on, and I think that their call today was very good. They're in a little bit of a holding pattern while they're waiting for the approval of their next generation therapy, eye therapy. They're locked in pretty serious combat with other companies like Roche in the eye arena, but this next generation eye therapy could keep them in the lead. I think Moderna, we're still a perform rating on, but we've always liked the name from being a mRNA bellwether and the leader in that area. I actually do believe the stock is cheap. Now, of course, we are perform rated, but you look at, for example, the COVID-19 sales, vaccine sales for their first product sort of launch. Then you've got the next series of product launches occurring as early as next year, RSV, potentially flu. Stocks tend to be well correlated in biotech with the next series of product launches. And then, there's a pushback, which we had a couple of years ago, that they're spending a lot of money on OpEx, but they're getting very noteworthy designations by regulators, like breakthrough therapy designation on quite a few of their projects, like flu, like RSV, like their cancer vaccine. So meaning that investors are potentially going to get a really good ROI in the future from very good R&D being done by Moderna, which they're investing in. So we're perform weighted, but I would say bullish, and we're really, we really think the stock is starting to tee up very, very well.
So it's amazing, because it does sound like it almost sounds like you would have a buy or strong buy by the way you're speaking about Moderna, but at this point you have a perform weighting, and your strong buy would be on Regeneron. And what are your thoughts on some of the other names, like the vaccine makers, Pfizer and J&J? Where do they head from here?
Yeah, and Nicole, and really good point. Our perform rating on Moderna, first and foremost, it's the difference between the dream and the reality. And we still have a delta there that we need to see, before we would become bullish, strictly speaking. I think the other companies, look, it's really simple. I've been in biotech for, 30 plus years between industry and Wall Street. And it's rare that you come across a company like a Moderna with a platform that can really change the game. And I think they can. The other companies are great. Pfizer's a partnership with BioNTech in the mRNA arena, but there's a few platforms we've seen as flexible and scalable as mRNA in a long time, maybe antibodies, probably 20, 30 years ago with Genentech and then Regeneron. So, even though the other companies are really doing tremendous work in these areas, and we're seeing more vaccines come through, the scalability and the flexibility of the mRNA platform, which Moderna leads in, is unmatched. We believe.
Right. Yeah, absolutely. Thank you for all of that. Really appreciate it. Hartaj Singh of Oppenheimer. Good to see you. Good luck there at Moderna. Appreciate it. Coming up next, the disruptors. Kevin Green standing by to take a closer look at Cloudflare. Now that stock is up about 40% this year and report.
I just dance around up here. Not building much of a handle yet. Fish is up 0.4. Rad's up 2.5 now. 2.6. Mullen back to VWAP. I think Tup still has energy, yeah. The fact that it bounced on that 50% is a good sign for the bulls. Barbecue down 6%, 25 cents. Buy a share of barbecue. Looking for 1750 for support. Could find it before. There's this area 23 cents. Yeah, that actually might be a support. Got a support here. Expected as resistance there, a little bit there. Support back in there and there. I want some more rad calls. I think it's true. Here's PayPal for you. Oh. It's coming up next, maybe? Yeah. little PayPal insight. Yeah, there you go. Run. Making its way back to VWAP here. Maybe.
Let's get nuts!
Let's get nuts. Tasty STI, thank you, sir. Appreciate the generosity. Oh, it's for the coffee. As much as I have this cough, I've still been pretty faithful about having a coffee. So thank you for that. I will enjoy it in a couple hours. Thanks, Tasty. I appreciate the support, man. Can't fully do George's Let's Get Nuts. I'll have to wait for my voice to come back better. Oh, and then we're getting nuts. Yeah, top is bouncing. Did a perfect 50% retracement from that huge move it did. Bounced right on that level. Nice one maybe to sell calls on, sell some premium on. Buy a new high there, I think, yeah. So I might want to fill this gap. Find resistance up there at 450. I fill that gap. PayPal.
Seeing the better part of the growth for the company, but that also does put pressure on those profit margins, which has been a struggle. I think for me, it's just, I don't have a recommendation until they get someone at the helm.
I see. Moshe, where do you stand on some of those other names, like the competitors of Square or any of the others?
Well, we're very sensitive to companies that have gap earnings and companies that don't. Square still doesn't have gap earnings, so it's really difficult for us to recommend the stock. Square's consumer business is actually doing well. Cash App is looking good. Cash App is very specific. It kind of targets the underbanked. But then the merchants piece has been under pressure,
Underbanked.
and that's actually
That's my
been,
new name.
growth there has
I'm the
been
underbanked.
decelerating because of competitive pressure. We actually like some of the what we call deal stocks. We like Global Payments that had a great quarter. We like Fiserv. These are all two-sided platforms catering
Next
to
green.
consumers and merchants. And we even like FIS. These are all companies that trade at very reasonable multiples. It seems that the metrics are starting to look better here.
Yeah, so you like a name like Fiserv. Interesting. When you look at what's going on in the world of fintech and mobile payment, where do you see it headed in the big picture, Sandra? I mean, whether they get a good CEO or a great CEO, the trends are the trends, right?
Yes, that's true. And one thing PayPal has going for it is that it does have 22% of the market share and transaction volume is up. So that is a bright spot. I think they really just need to focus on getting someone at the helm, someone good. And then from there, the stock price will determine whether investors like their choice.
Sometimes people also turn to names like Visa and MasterCard. A global footprint certainly can make money on. We saw an incredible summer. Moshe, where do you stand on those kinds of names?
We consider the networks a bit more defensive, especially if we're headed towards some sort of a slowdown. It doesn't mean that they won't get impacted, but for example, we like Visa. Visa is a bit more debit centric. You can argue that during a slowdown, consumers will use more of their debit cards for non-discretionary purchases. But we like them more for defensive reasons, and these names have outperformed during the last downturn.
Yeah, understood. And just final thoughts here, Sandra, on your big picture, because now the credit portfolio is something that we're watching. That is an area that showed a little bit of weakness, right?
Yes, absolutely. I mean, credit has been a drag on them. And then moving forward, if consumers stop spending as much as they have been, that's going to put pressure. However, they can make a dent if they, in my opinion, if they just make their or focus on convenience, right? That's what people want, convenience and mobile pay capabilities.
All right. Well, thank you both so very much. Great to see you. A great discussion on PayPal. Moshe Katri of Wedbush and Sandra Cho, Point Wealth Capital Management. Thank you. And by the way, look at the markets getting closer and closer to that unchanged line, trying to give it a go. The Nasdaq's already in the green. You're seeing energy, communication services, materials helping to lead the way. The Dow is down just 5 points now. I'm Nicole Petalides. Thanks for joining me here on Trading 360. I will see you at 2 p.m. for the watch list. Keep it right here. Fast Market is next.
Barbecue 24.75. It's down 7%. You should build a little head and shoulders up here. Didn't quite fill that gap though. I'm cautious. Barbecue's at the bottom of the range for yesterday. 24.99. 24.60. Oh, 24.99. I did take this short there. Doing on active trader though. Yikes. I don't even know where it is. Active Trader Pro is like no faster. It's definitely slower for me right now. Yeah, this is awful. Okay, Rad's up 2.6. GME's up half. Got a stupid entry on those SPY puts. Still like it though. PTO 60%. Got 9% on Mullen. Came back down to VWAP. Dish is kind of making a little move up 1.5. Nice bounce on that support. Looky, looky, looky. Oshkosh? Oshkosh Bagosh? Oshkosh truck? Yeah, these options aren't very traded. But yeah, you're right. It's getting to close to that resistance up there. Guess they had good earnings. Might break. Divvy on this. $1.58 right now.
In terms of analyst expectations, they are expecting $1.91, or we're expecting $1.91 in earnings on $8.7 billion in revenue. So technically in line at the high end, but definitely on the softer side. Now, as for 2023, Qualcomm said it expects handsets to decline in a high single-digit percentage rate, partially due to a slower than expected recovery in China, but it does expect to see improvement and a return to growth during the holiday season. On the call, Qualcomm CFO said, since it remains difficult to predict the timing of a sustained recovery and customers remain cautious with purchases, we continue to operate under the assumption that inventory drawdown dynamics will be a factor through the end of the calendar year. And Qualcomm has already been in cost-cutting mode, but it looks like they'll continue to be. Said that they may cut jobs as consumer spending on gadgets really remains weak. So I will say they did talk a lot about AI on the earnings call, said they're uniquely positioned to help shape and capitalize on the upcoming Gen AI opportunities. So looking for that to be a bright spot, but certainly not giving any boost to shares today. They're off about 10%. You did mention that downgrade. Deutsche Bank actually downgraded shares to hold from buy, cut its price target to 120 from 130. And basically it was due to the soft guidance, but also said that some of the headwinds are leading to rising structural rather than just cyclical questions. So they think they'll remain in the 120 range until some of those questions are answered. We did also see some other price target cuts from Susquehanna and JP Morgan. They stuck with their overweight ratings, but as you can see, well, actually, I thought the graphic was up. There's the graphic. They did cut their price targets, but then we also did see some price target hikes. Piper Sandler and Morgan Stanley, as you can see, raised to 140 and 129, keeping their overweight ratings. So a little bit of mixed reaction from the analysts. Overall, the majority still are in the buy camp. 65% or around there have a buy rating. The median price target's now 140, but shares currently trading well below that with that 10% dip today, off about, it's trading around 116.53 right now.
Yeah, Caroline, I was going over the earnings call and some of the commentary from the executives there. It just seems like that's part of the reason we're seeing the bigger than anticipated sell-off is they didn't really have much positive things to say, or they didn't spin it that way anyway.
Yeah, that certainly seems to be the case. AI was certainly the positive side of things, but yes, when the commentary around smartphone demand continuing to kind of be sluggish also raises questions for what we'll hear from Apple later today as well. That being said, Apple is much more diversified from Qualcomm. Revenue is only expected to decline a little more than 1% for Apple compared to Qualcomm's 20+% decline. And we know services revenue and their push into financial services has definitely been going well, but it sort of raises some questions about what we could hear. But it seems like, Qualcomm makes chips for the higher end Android and some of the lower end devices, and people just aren't buying them as much, and they expect consumer spending on gadgets to remain stubbornly weak, and that will continue to hurt Qualcomm.
Yeah, you wonder if the high-end revenues from the iPhone are going to get hit also, because those are expected to drop a little bit going into earnings. But yeah, great rundown here on the Qualcomm downgrade post-earnings. Thanks to Caroline Wood, Senior Markets Correspondent here, breaking down the story for us. But now let's bring in Nathan Peterson, Director of Derivatives at the Schwab Center for Financial Research. Nate, I wanted to get your take here on the markets in general after that Fitch downgrade yesterday. We're under pressure, but now it seems to be an interest rate story with that 10-year yield rising, putting a little bit of pressure on equities here.
Stopped out of that short.
Yeah, exactly. And Alex kind of covered
Still
some
like
of the reasons why we're seeing yields kind of come up. And, guys, the fact that the 10-year looks like it's threatening to make a new cycle high, that alone should validate a 5% correction here in the market. And then, when I assess at least just in the near term, the next couple of weeks or so, I'm getting a lot more bearish check boxes than bullish check boxes. And I talked with Oliver about this last Friday, and we ran right up into 4,600 resistance there. If you look at the RSI, we have negative divergence there. We had a nice bearish engulfing candle when we were rejected at that 4,600 level.
3.5% on red.
Bearish seasonality. And while inflation has been doing really well recently in terms of validating that bullish thesis of disinflation, we're getting that CPI next week. And what concerns me is that, perhaps the market is expecting to see that theme reinforced. But if you look at oil prices, we're up 15% in July. And then July also represented that high watermark for the CPI data. So the year-over-year comps are going to get tougher as we go forward. So potentially when we get CPI and PPI late next week, what happens if that doesn't really or what happens if it comes in above estimates? That might be another catalyst or another excuse.
Wow, Troy, that is the most
like the Fitch
bottish pumping message I've seen in a while.
Take profits and hit that sell key.
Yeah, I kind of mentioned that, Nathan, Oliver Rennick this morning about maybe we did see the bottom as far as inflationary data goes. It had decreased from June until this month. Well, just last Friday with the PCE came in a little bit lighter than expected, Alex. But if you look at companies like Clorox, I mean, that thing
still could come down. We've got
Procter & Gamble last week. These companies are still raising prices, and their earnings are really good. I mean,
got a head and a shoulder here.
Does that break the consumer? Because the consumer's
might take some time.
Obviously absorbing them, right? And now you've got crude, as Nathan mentioned, it was up 15%.
But we also have kind of this
That's
cup.
That's not going to help as far as inflationary pressures go.
I could still see a breakout.
If you're asking me, the inflation story is not the story anymore. Right? That's the story of 2022. That was the story of 2021 before 2022. The disinflationary story to me is still intact. But the fact that you have yields going higher and it's not driven by inflation is far more worrisome for equities. And you do that in the heels of, let's just be honest about it, not that robust of an earnings quarter, still a lot of promises to be had for a recovery in the second half of the year. I haven't seen the data that shows that that's going to happen.
Yeah, Carvana's made a nice cup and handle there.
Higher borrowing costs, you throw in downgrades to U.S.
Here's
debt.
Here's the bottom of your handle.
Just enough to kind of poke the bears a little
looking
bit
for a
here,
retest.
get them a little bit
Retest the high and maybe a breakout.
To put some pressure on this equity market. I'm with Nate. I think in the near term, there's this kind of vacuum of space. You have bad earnings out of Amazon and Apple today. I don't know. I think the market's got a lot of things priced in that haven't happened yet. And just a couple of those things don't go as planned. I think that the pot odds weigh far more favorably to the downside than the upside right now.
Yeah, I kind of agree with that thesis here, Nathan, that Alex is laying out. I probably try not to put it out so thickly when I'm talking about, when you see RSI levels that we did at the end of last week, at the beginning of this week, where they're above
Head
70.
and shoulders up here, though.
You've got
So
gains
nice.
of over 40% in the NASDAQ 100. When you look at the earnings that have come out so far, and we're talking about, FactSet's putting out, 80% beat rate on EPS, but revenue is coming in the lightest in years as far as revenue beats. I believe it's only like 62, 63% of the companies are beating on revenue. So they are getting squeezed a little bit, but is it okay when you see companies come out with earnings, but they're making changes, they're talking about efficiencies, they're cutting jobs, they're doing the right thing for shareholders, right?
Yeah, I mean, look, we saw productivity this morning. I mean, that was a bullish check mark. We also saw, the labor costs, the preliminary labor costs. That was a bullish check mark in terms of margins, and that's what you're referring to when you're talking about EPS. But you're right. I think we're at 59% beat rate on the revenue, which would be the lowest since Q4 of 2016. And look, it's the revenue you can't fake, and a lot of that might have to do with inflation. We understand that in terms of that being, in terms of that relatively low beat rate. But on the EPS side, of course, we know there can be that financial type of engineering, and you can work with margins. And yes, it does come down to earnings, but when you're looking at a forward PE of 20, which gives you an earnings yield of 5%, and then you can get a relative quote-unquote risk-free rate of 5%, something's off there, or you're going to see a lot of upwardly revised earnings growth estimates as we move forward, and perhaps that's what the bulls are forecasting here as we move into 2024. I think it's flat for Q3, 8% for Q4. Of course, these are just forecasts, which are subject to change, and then I think it picks up again there in 2024. So even if you're forward-looking, though, you're going to need that narrative to basically, come through and to manifest. And so that's still a question mark. And gosh, I'm just surprised to see an earning yields in line with the risk-free rate. Where's your compensation for taking on risk when you got a 20 forward PE? It's a little bit iffy right now.
Missed the round move by
and
6
you guys
cents.
are talking about beat rates.
Whoa,
I mean,
9.5.
when
Holy
I look
smokes.
at it, of course, it is about 80.
Just wakes up out of nowhere.
In the 80% of the names that we've seen in the S&P 500, but actual earnings
Were you looking for shares?
down nearly 8.5% collectively.
Yeah, I was looking to average in. I didn't fill anything.
80% of names.
I wasn't going to be
energy, of course, but you got tech in negative 7%.
too anxious on it. I was just trying to get a good deal.
The NVIDIAs, the AMDs, all these companies that are supposed to be leading the charge. Well,
I think this might be a. I mean, I'm hoping, and I think it could be a longer, more sustained rally, kind of like a Carvana even. Maybe not to that extent, but
a disappointing quarter, even if it's better than the expectation.
Similarly, this
valuations continue to swell.
Yeah, and that's to Nathan's point when you're saying
Carvana's
that
been
forward PE on
way
the
down.
S&P 500, it is expensive. And then you've got all these, pundits
long
coming,
time.
to the forefront and in the media saying, hey, we're revising our S&P 500
Brad doesn't have like the growth or the hype, but
I didn't get a lot of
hey,
that.
money's money. If it starts to roll, people jump in.
Nathan, when I see that valuations expanding with the low bar set on earnings, and you did mention
I was trying to get some Septembers.
That continues to go
They
down.
didn't fill.
It seems like every
August
day
and then January's.
with those companies. So now below 60 on the beat rate there. What can change your mind here? Because I think this pullback that we've had the last couple of days, Nathan, is actually healthy for the markets. It was probably much needed. Is that what we need to kind of stabilize things?
Oh, nice.
Yeah,
You're going for the shares?
By the way, if I pull up a chart technically, we're still in an uptrend. You can look at the pullback for the last 2 days and say, hey, this looks pretty much on par with a standard type of consolidation move and a healthy trend. And I have to agree with that. But it is about that risk reward. Alex kind of alluded to that as well. It's that risk reward. Are you looking for 1 point to the upside versus 2 points of risk to the downside? It's lopsided. So is this the best place right here, right now to put new money to work? But what would change my mind? Gosh, it's tough because, even with that 20 forward PE,
if this head and shoulders doesn't play out,
that bullish narrative, you're saying inflation
call me Miles Davis.
is slayed, victory, the Fed is done, the consumer is going to hang in there. And look, I understand with the wealth effect, that is really kind of reinforcing that the strength of the consumer. But we are noticed their savings are getting depleted. And then, by the way, we are throwing the LEIs and the inverted yield curve and saying, yeah, it's different this time. So all of that going in there, look, it's just the valuation, everything at a price. So when you're going into a market right here, right now with a 20 forward PE, you have to just be saying, well, that's my thesis going in. I'm saying, yeah, all that stuff it's different this time. We've slayed inflation, the Fed's done, and earnings are going up. That's what you're buying. If we were at a 15 PE on the market, this would be a different conversation.
Yep, definitely. You know, maybe that optimism taking a little bit.
Dish
of a
is
hit,
another one I feel like has
needed at this point.
Potential for pumpability.
All right, guys, let's take a quick break. We come
It's
back,
not been pushed down as much as Rad. Rightfully so.
To see revenue
making
drop
money.
Slightly, but it's just off all-time highs. There's some.
We'll see what happens with earnings.
Right there
Hopefully it's super good and we get a huge gap up.
Into their earnings. Fast Markets coming right back.
I gotta stop down. Okay. I'll wait. Wait. GNS 20%. Whoa. We were looking at that this morning. I was liking the bounce on the trend. Got another one. A resistance line here. So it's starting to slow down. Steeper, now it's starting to flatten out. And we'll see if we break it today. But yeah, GNS is now looking good as I think the gap has been filled. Yeah, the gap's been filled. That's what I was waiting on.
Several years ago that the upgrade cycle for the actual iPhone product was extending in time as the product improved, and also the improvements from model to model are somewhat negligible. It's the kind of maturation of a discretionary product into a consumer staple, and they found ways to monetize you post device ownership. So through things like services,
see if GNS breaks this
AirPods
resistance
and
here.
other things to kind of connect to your device. What doesn't really add up completely to
Watching
me
Nicola.
is even if we give Apple the benefit of the doubt of sort of expanding margins by focusing on things like services as a growth point, you know, we're still
Kramer,
at an
Jimmy,
extremely
Didi?
elevated forward price to earnings ratio, which is sort of a, you know, I would say a general, generally accepted valuation metric. We're upwards of almost 30x right now. 5 years, the running average is about 23. So let's even shrinking that down a little bit. On a 2-year basis, it's about 25 and a half. So if you just looked at that 25.5, that would target around $165 for a price, assuming the earnings are sort of where they're expected right now on a forward basis for 12 months. This is all basically looking back in time where we had rates that were essentially at zero. So I look at this and I think shouldn't we be demanding more from these companies? Shouldn't the earnings price to earnings on the forward basis be lower in a higher rate environment because you want more for that earnings yield? We're getting the opposite in a company that isn't showing growth. You just talked about the revenues expected to be lower year over year. Doesn't add up.
Yeah, Nathan, when you look at Apple, they sometimes get a pass. Maybe this is going to be a trough quarter for them. We've seen softer smartphone sales that might impact their earnings here. But you can't deny the fact that, hey, they reward their shareholders with buybacks, dividend. They might come up with a dividend hike on this. They might increase their buyback. They've got a rock-solid balance sheet.
Yeah, certainly. Probably the best run company in the world, at least the market thinks so, via the market cap, their balance sheet, like you guys mentioned, the buybacks, their ability to kind of alter that EPS line, even if they're not getting the top line growth, and have the ability to do that. Sticky ecosystem. Yeah, there's a lot to like there, but that's not a secret to anybody. And when I look at the company, the valuation is the biggest thing Alex mentioned. I got $6 for next year is what I saw, so that's about a 31.8 PE. Where's the discount for law of large numbers? I don't know. It's not in here. It's kind of a safety trade, a little bit of a crowded trade. That's what I don't like about a stock like this. And you could say, well, hey, Nate, over the past 4 quarters, the stock has moved higher.
There you go. Barbecue woke up a little bit.
This time, well, heading into the report, we weren't
only
at
down
all-time
0.5% now.
highs. And so again, it kind of comes back to that. Everything at a price. Do I want to get into Apple right here, right now, when they're not even showing any top-line growth with that forward PE of 31? Or is this also taking into consideration kind of the bearish tilt on the overall market setup heading into the report? That makes me feeling a little bit cautious heading into tonight's numbers.
Yeah, and you got an example trade for us here, Nathan. You know what? I kind of noticed here. The anticipated market maker move is only about plus or minus 3%. It's kind of muted for Apple and $192 stock. How do you want to look at this one for an example trade?
Yeah, it does seem a little bit low. Yeah, I know. I didn't really, go with that big of a. You could be saying if you believe IV is undervalued, then you look for some type of an IV push that would take advantage of that. But I was just looking at it as simply like, look, I respect the chart. It's definitely an uptrend. Again, you could look at the pullback we've had over the past 3 days and say, par for the course, just another healthy consolidation. And that makes the setup a little bit easier heading into the report. We're not at all-time highs, but for the reasons I mentioned, meaning the overall market having that risk reward that seems lopsided to the bearish favor, and then you have the valuation. And guys, there's a lot of companies that, because it's running up 50% year to date into the report. I'll take an example like HubSpot real quick. This morning they beat across the board, raised guidance. The stock is down 8%. Why? Well, the stock was up 90% heading into the report year to date. And so Apple is up 50% heading into the report. So that makes me just a little bit cautious. Again, this is an example trade. I'm kind of providing my subjective assessment when I look at the setup heading into the report and taking that all into consideration. Going with something simple that's not too capital intensive, that has some flexibility, and that's just your standard long bear put calendar spread at the 185 strike. It's basically your implied move.
Yeah, let's break this one down.
Rads,
Apple,
both flying above the breakout.
11th weekly,
Very bullish on this one.
puts. That's 8 days till
Look for a move back
expiration.
to the
Then
highs here,
selling the near-term
28.60.
August 4th weekly, same
It
strike,
bounced perfectly on that
185 put. Paying roughly
61.8%.
a debit of 70 cents.
Nice little
Nathan
inverse head and
brought us
shoulders here even.
That's your risk on this trade,
Set up a nice
$70
big.
per spread. But look at that.
Wow, there's a handle actually on a much bigger cup.
About 176 to 195 on the risk profile. It might be tighter than that.
But it could be setting up a little cup and handle there too.
With that expectation that vol will collapse
This cup.
in those short-term options, which have a higher implied volatility. But
you also see this little
$70. You have some
shorter
risk
time
on
frame
that
cup
short
also.
option into expiration.
Right
But
here.
Alex, this is a directional
retest.
play. Inexpensive,
Maybe
only
pull back
$70
the handle and
at
then
risk per
hopefully break out.
spread, Apex is out at 185. Your thoughts here on just not a simple, but a basic put calendar to the downside.
You're feeling Tubbs energy.
Kevin Hink's special week over week calendar spread around earnings. Yes. But a couple things that I like about these type of strategies is if you have a price target in mind for where a stock
GNS rejected right on a resistance line there.
A relatively liquid stock that has a lot of strike
ready to break.
availability like Apple does. You could probably set this up so that the apex is pretty close to that target.
I mean, this is a big support, actually. It's 54 cents, so
also it's sort of
breaks
an
this.
Small miss small situation.
Might be going back down to 30 cents.
Not the highest of probability trades because you kind of got to be right to see potential returns
you
on
don't look
this.
for long on this
but
thing,
in
though.
the event that it isn't profitable, the risk is relatively contained compared to other strategies that we look at. Still $70, so it's not risk-free by any stretch. But I mean, we look at trades, cash secured puts, for example, that
MSGM,
in the case of Apple might have $18,500 of risk or capital associated with it. This one's only $70, so undoubtedly on the lower side of
PTO bouncing off VWAP.
Yeah, and I think that's a good entry into kind of explaining that. Hey, the profit. Risk profile here shows that you could profit $300 on this type of spread if it's at or near 185 at expiration. But in reality, if you're looking at maybe this thing expands, if the stock goes at or near 185 and expands to maybe 150, 125, that's when you start looking at, hey, what could I potentially reward on this? Because you are going to get that collapse in the volatility on the option also. So you got to keep that in mind. But a good look at a slightly downside put calendar brought to us by Nathan. Appreciate that. Taking advantage of maybe that one standard deviation move to the downside here. And thanks to Nathan Peterson, Director of Derivatives at the Schwab Center for Financial Research, helping us break down markets and Apple. But coming up after the break, Alex and I are going to be joined by Andy Swan from Like Bolio for discussion on Airbnb, which has rallied over 60% so far this year, but Expedia getting hammered today. Will the same happen to Airbnb? Stick around, we'll find out.
Oh, big bump in that, yes. There goes Rad.
This company, because it seems like the travel bug, it still seems hot, but Airbnb, I've seen some calls lately that are saying that, hey, maybe it's not going to be as robust as maybe some of the hotels.
Yeah, I think the safe bet here is that the novelty of Airbnb has certainly worn off from a consumer perspective. And you're right, you know, we're seeing this earnings season as kind of a sell first, ask questions later mentality. That happens a lot of times after a big market rally like we've had, so that's no surprise. But when we do zoom in on Airbnb, there's really two things that strike me. You know, I don't think that the business is doing poorly at all, especially when you look at it in isolation. But what concerns me is when you look at it versus competitors. And so we just took a quick look at, you know, the website traffic that is going to Airbnb versus a competitor, Booking.com. And what strikes me again, you know, it's not a big drop off for Airbnb, really pretty strong kind of typical seasonal results. But the difference between the two, the difference in the web traffic on Airbnb versus Booking, you can see back, you know, a year ago was a very significant gap. And that gap has narrowed almost to the point of irrelevance at this point. So it tells me that people are looking elsewhere than Airbnb. And of course, the reason for this, I think, is very clear. People simply are tired of the fees and the runaround that they get when they book through Airbnb. It is not nearly the type of consistent experience that you get at hotels. And when you look at Airbnb versus a whole host of competitors, whether it's hotel chains or you know, general travel sites, in terms of consumer happiness, Airbnb is way down the pack and getting clobbered.
They've changed their pricing model, so now when you book, you can see it's the overall price.
You know,
they quickly got rid of
when we look at this,
whatever problem there was.
Every single hotel chain is above 70% happiness, and Airbnb is barely above 60% happiness. It tells us that there's a big disconnect between what consumers expect from Airbnb and what's being delivered. A lot of that is frustration with fees. A lot of that is frustration with communication with some of the hosts. And so I think Airbnb has some trouble ahead of it. I think that they've started to figure some of these things out. But overall, we don't like companies that are the worst in their category in terms of making their customers happy. It doesn't bode well for the repeat business possibilities.
It doesn't help that, you know, names like Expedia and Booking are sort of stepping into this space more aggressively as well.
Barbecue,
you know,
back to the top of the range.
I don't think we care too much as long as you have
down 1%
a good
still.
selection of products and services available. And the concept was kind of proven by Airbnb. It's not that hard to replicate. If hosts start getting frustrated with some of their keep rates for their bookings, it's not going to take them that much to switch to things like VRBO or wherever if they have a better experience there. But my question to you is, how much of this is sort of a mix in sort of where the travel has taken place this year? We've heard so much about the return of travel to Europe. And I know you can rent Airbnbs in Europe, but you add in the complexity of maybe language barrier, familiarity with the location you're going to. Maybe it's a bigger travel party. Maybe a hotel is just easier. Is there a little bit of that going as well? I know you're focused on English-speaking tweets and social media content, but Americans are the ones doing the traveling, so I imagine they're talking about it.
Yeah, that's exactly right. I think that just across the board, you know, unless you're looking for something that a hotel can't offer, such as, you know, a house on the beach or a house in the, you know, quaint little downtown of a small town, you know, a hotel generally is giving people a better, more consistent experience.
is making its move, maybe.
And like you're saying, if
got a lot of
traveling
volume
internationally and you're potentially running up against a language barrier, then a hotel really de-risks
some GNS.
the travel compared to booking with an Airbnb. And so I think Airbnb is making some steps in the right direction, a little bit more transparency in their pricing, but I think at this point, all that's done is really highlight how much they were kind of ripping people off, in the past. And so they've got some other hurdles to get over. Going into this report, the reaction from Expedia just tells us that the risk for Airbnb shareholders is pretty severe going into this report. Certainly, I would expect that the risk is significantly larger than the potential reward on this report.
Yeah, to the downside. And I've had that experience, Andy, that you just described, that your data reflects. Rented an Airbnb in the south coast of England. There was a booklet of rules, regulations, things I had to do, versus we stayed in a hotel in London. I was at the checkout counter for 2 minutes. So the ease of things is a lot better than in that experience. But do you have an earnings score going into this one? Because it seems like a lot of the travel stocks have been pulling back lately.
Yeah, officially our data leads to a pretty neutral score, but based on what I saw out of Expedia this morning, I think there's a bet worth making to the downside. I think that if we get a large move, it's more likely to be in that direction than to the upside. And so I'll let you guys figure out a trade from there. You guys are so good at figuring out that defined risk versus reward. But I think if I had to lean, it would be to the bearish side. Officially neutral, but I could really talk myself into a trade on this.
All right, great stuff, great data as always, Andy. Love this angle here, and I was really surprised at the happiness levels of Airbnb, because it seems like everybody's trying to get one. But great stuff as always. Appreciate it.
Thanks.
All right, that's Andy Swan, co-founder at Likefolio, breaking down the data.
Ooh,
Alex,
still going.
breaking down the data. We're seeing hotel stocks just getting hammered today. Hyatt. They came out with earnings this morning. Marriott's down a little bit. Bookings down on the back of Expedia getting hammered. How do you want to look at this from an example?
Well,
trade?
really kind of concerned to me earlier, I think it was this week, that Marriott came out. Their numbers were pretty good.
Yeah, they were great.
Stock went to all-time highs, and it couldn't even stay up on the day.
Right.
And so when you start getting to the point where even good isn't good enough, well, what is bad going to do? And so, like Andy, you kind of see this as an asymmetric risk to the downside. You might even have a situation where, just throwing out random numbers to illustrate a point, 75% of the time the stock goes higher, but in that 25% of the time, the move is 3, 4, 5 times larger, and it's even, to some extent worth taking that risk from a pot odds standpoint, because the payoff is worth the less likelihood of it being right. And so I looked at a strategy that's actually very comparable to what we looked at in Apple, but it's looking for a pretty aggressive downside reaction. You have obviously weakness here today, but what if Airbnb comes out and has a disappointing result on the heels of Expedia, on the heels of these hotel chains coming out?
Spy filling that gap.
Maybe have sort of this rug pull almost like moment in a name like Airbnb that's had a pretty substantial move to the upside. Right. Looked at buying a put calendar August 4th, August 11th. So the Kevin Hinks special once again here, 125 strike, 60-cent debit. Again, the big concept here is customization that's afforded. So if you have a completely different outlook and you're bullish this, or you're more neutral, like the earnings score suggested, or even moderately bearish, you can adjust these strikes.
Who supports it bounced off today?
That point. So I think that's really a critical point. Don't be married to the idea of the illustration that we're looking at here for literally just illustration purposes.
You have a ton of volume.
Change this in Airbnb
All good
to
things.
better reflect your personal outlook if you're looking at these type of a trade.
All good things.
Aim small, miss small. 60-cent debit here. And if this thing moves substantially
consolidate a little bit
towards that potential strike of 125,
that was your consolidation.
$16 move, which is over 10%, which would be a big, big move.
You're high there on SPY.
You're talking about sort of, maybe
build the gap.
$1 out of something like this. I'm not sure what it would exactly be trading at, but it'd be trading for more than 60 cents.
Yep. Let's break this one down. Similar to Nathan's Apple trade here, downside put calendar, 1 week wide, buying that August 11th, 125 strike put, selling the same put in the August 4th weekly series that expires in just 1 day. Paying a 60-cent debit, there's your risk, $60.
Right, it's up 10.5.
That nice wide range that you got here between about 110 and
145.
It's probably closer to maybe 115. Maybe 140 on the upside, so you've got to take that into context. You're buying basically a 78% implied volatility on aggregate on this one, Alex, in the August 11th series, and selling in the August 4th about 177%. So there's that divergence in implied volatilities that gives you that low cost entry point on this. You do have some assignment risk on that short 125 put. But if you get that more than one standard deviation, maybe 2 standard deviation move to the downside because the option market's pricing in about a plus or minus $10 move in it, this type of strategy works out. And I like that you mentioned the flexibility of calendars, Alex, where, hey, based on where you think it's going to go over the next 8 days, that's where you put your strike, right?
I would also say, too, that while you see the apex of that profitability graph right at 125, and maybe that's the case at 2:58 Central Time Friday afternoon or tomorrow, I would say that you're almost, if you had this exact trade on, you almost want to move towards like 129, 128. You want there to be some room between that short option that expires tomorrow and the current price. You want it to be out of the money,
right?
But you know that there's still just that week is enough time for there to still be a little bit of
Whoa.
value in that long put. Look, if it moves to 125, this example trade will be fine.
It's so
But if you're
volatile.
looking for a perfect scenario, I think it'd be a little
Oh, I'm looking
bit,
at the 1 minute. That's
above
why.
that.
Yeah. 125, 125 half. All right, great stuff. As always, good look at that example downside put calendar here in Airbnb. All right, going to
Just
take a
running
quick
away
break
without
here.
me.
When we come back, we're going to take a look at another big tech name that reports earnings after the close. That's Amazon. That stock's up significantly, over 50% so far this year. And we'll check on the health of the consumer and the health of AWS. I think that's key. We'll be right back after this short break.
Wow, wow. I've not been able to get, I've just been chasing. Dang, man. I can't market order on stuff that's under $1 on E-Trade. That is just ridiculous. Got a tight spread, like, let me do it. Yeah. This thing, it very well could have continuation since it broke that resistance and it bounced on that support. So whatever it does today and consolidates at, I think we could be seeing a reversal on it out of this downtrend it's been in for 4 months. Alright, good thing I get filled. Need to wait for VWAP. Oh, I did get filled. What? You trade so slow? That's why I kept running out of funds. I got filled somewhere in there. I got filled down here. Oh my gosh. I actually have a day trade on here too, so I consider just scalping it today. See if it wants $1. Next resistance $1. This low here. Good spy. Ugh. I'll start with this RSI divergence down here. Should have just played that. On with it. And we had this little inverse head and shoulders. I was waiting for the perfect setup and it never happened. It just bull flagged. PTO breaking out up there too. Rad is up 11.5. For a climb back up to the high on that one. Look for SPY to 4. Oh, broke that, so 451.08, 451.52. Silly E-Trade indeed. Yeah, I just use the browser platform, the Power E-Trade on browser, so you know, it's not the desktop platform, it's just I'm having to rely on, I guess, the internet more and browser for it to be real time. But yeah, sometimes it does that. It just shows pending on there. Sometimes it does that when it lags. And when I refreshed everything, it's like, oh, it had filled actually. Which is good. I'm happy with that fill. I mean, it'll probably come back down there. Maybe I'll get some more then. Helps with my FOMO though. DFLI. Yeah. Nice little 5% a day. Keeps the day job away. Mullen is it's looking good. GNS going again, reaching for that dollar. I might just day trade these shares I popped in today. Giddy up. I know, yeah, that DFLI is just on an escalator.
Get enough confidence that the bottom is in when it comes to Amazon as well as the consumer doing pretty well. So I think that's really what we're going to be looking forward to, not only in the numbers, but also listening in on the call as far as their growth opportunities in the next couple of quarters.
Kevin, real quick.
I can't even get that ticker.
We've seen them take off with their advertising segment of their business. That's considered to be something over $1 billion a quarter at this point. Will that have any impact if they see some strength there in the advertising?
Nice new high there,
business, which is starting
almost
to
a dollar.
I think it will have a little bit of an impact here, Tom. I think the other side of that coin, though, is that as that business grows, the scrutiny, the regulatory scrutiny also grows with it. And we do know that they are seeing pushback not only here in the United States, but in the EU.
As just sell calls on it instead of sell the shares.
Amazon is really forcing these sellers to actually buy ads in order to improve their sales. So I think that might be a longer-term hurdle for the company as far as the outlook and the expansion of the advertising business. But in this quarter, yes, it could be a driver to push it over the top, especially when you're looking at the adjusted earnings per share number.
Yeah, we'll have to see if those competitors in the cloud space start to dig into more of their market share also
weeklies,
as far as AWS goes. All right, thanks to Kevin Green, Senior Markets Correspondent here, breaking down Amazon. And now we're going to go to an example trade here in Amazon ahead of earnings. This one's a little bit more complex because it's a combination of two butterflies that I'm going to look at here, all in the August 4th weekly series. And what this type of strategy does, when you combine a put butterfly with a call butterfly, they're both unbalanced, is you get risk profile like you're seeing there on the screen. Let's break these down real quick. On the call side, we're going to look at an unbalanced butterfly in the August 4th weekly cycle, so just 1 day till expiration. Buy one of the 130 strike call, sell two of the 133 strike calls, and then to wrap it up,
GNS can go very high.
Buy one of the 138 strike calls.
History of
Collecting
squeezing.
roughly a credit of a 25 cents on that trade. Now, in combination with that,
it's not like one's better or worse. I guess if I want to hold on to the shares,
here. And on this one,
not rely on me timing the market as much as selling them and then getting back into them.
Out of the money to the downside.
And if it's something like might have a more sustained rally,
and then
maybe sell calls initially.
Of the 120 strike put. So basically, equidistance, unbalanced.
But it depends on the options too, like how liquid it is, what kind of fills you can get.
About 15 cents on the put calendar or put butterfly. So in combination, you're collecting a credit of 40 cents on these two trades. Now, this is a six-legged double spread that we've got on here, two butterflies. So we've got some transaction costs, no commissions. Keep that in mind. But you're collecting a credit of 40 cents on this position. But with those, both of those, you've got those break-evens you see there, 121.60 on the downside, 136.40 on the upside. And you see that little area between 130 and 128 when you have the combination of the two butterflies. That's where you get to keep that 40-cent credit. This is a really short-term example that we're looking at, combination, but where the apex of profitability is at or near the short strikes in these butterflies. That'd be the 133 strike on the upside and the 125 strike on the downside. As
head and shoulders on there, maybe it will.
The anticipated market maker move plus or minus $8 either way in this. So if you're thinking there's going to be more of a muted move, where it goes a couple bucks either way, this type of strategy takes advantage of that. Now, what's your risk on this? Well, it's the 40 cents minus the $200 width of
signed early.
One of each of the butterflies.
How much time did you have?
Break evens I mentioned already, but you've got about $160 in risk, and that's going to be below 120 if it falls out of bed and goes below 120, or above that long 138 strike.
Yeah, it might break $1.
Keep that in mind. You do have risk on this. It's a combination trade. If you're more bullish or bearish, maybe you do one or the other. But this is a combination trade. It's kind of interesting. It's got that Batman motif as far as the risk profile goes. But if you think it's going to be a muted move, just a few dollars either way, this type of strategy takes advantage of that. And if it doesn't move at all, remains where it is, you're still going to be profitable because you're collecting a credit on both of those butterflies. All right, that's going to do it for Fast Market today, but stick around. Coming up next
12.5 on RAD. It's just kind of slowly climbing up still. Hasn't really made a big move yet. I had that pop this morning, some volume. Haven't seen that replicated. I'm gonna average into GNS today or tomorrow. It'll probably come below my cost. Also, might not, but RAD slowly climbing up. Wayfair's been inching up also. MSGM back to VWAP. GNS consolidating up here over that 87 cent support. Alright, there's Gina's back to VWAP. And
so many other names reporting that it is a jam-packed calendar today after the close. So we're about 3 hours away from what I can imagine is a very busy afternoon, and markets have erased their earlier losses. We're seeing some solid green across the board now.
Yeah, after yesterday's unscheduled weakness in the market, unscheduled volatility in the market, we actually have the table set for some volatility. Could be to the upside, could be to the downside, but we got Apple, we got Amazon after the close. And then tomorrow morning we get the monthly jobs data. So between those three things, all of them positive or things that would lead
set up
to
a bigger inverse head and shoulders here.
To the upside. All of them something that leads to a negative reaction. You could see a very big move to the downside as well. So I'm just hoping for some coordination between these three things so that we get some movement. It's so much more fun to talk about markets when there's some volatility.
I know, and I would so much like to see this weekend on
you're
a
in
positive
Mullen,
note,
and
but
you're not a
we're
gambler.
Bracing for obviously some downside, as we could see. Apple and Amazon
nice.
disappoint,
Looked
frankly,
good.
because there's a lot of expectations now riding on both of these
16,
names. But as always on the
1605 is kind of a resistance.
With our upvote and downvote segment, which we are looking at all
There's a lot of
earnings names
trades in here, so
today after the closing bell.
a very clear one.
Be looking at Apple ahead of its earnings for
$2 or 20 cents.
I think the most FOMO-inducing name of the day. And we'll see Wayfair today shining after reporting some really impressive second quarter results, and the street feeling even more optimistic on Wayfair following that second quarter print. Last but not least, we will look at WW International, which is just another name that's reporting today after the closing bell, Alex.
Yeah, tons and tons of earnings names, some post-earnings, some pre-earnings. A lot of W's at the last part of the show. We get a look at Wayfair, the single W, and then WW International.
I guess actually I got to stop out on Mullen.
Apple's going to be a big part of today's show. It should be. Today is Apple Day. Apple is so big that it gets its own day, even with Amazon on its own day as well. Lots to get through. 2 upvote, downvote, not endorsements, not recommendations. 4 really interesting names. 4 names I think you could argue are like quintessential next generation type stocks.
They are, and it was very easy to select these names because they're names we discuss so often on this show, but also, like you said, they are sort of the quintessential names that you think of when you think of growth names per se. But we'll start things off here with Coinbase.
Finally, you can put stop losses on. I mean, you can mitigate your
conversation I think that's important.
Your losses or
tied to the overall trading
lock in some profits if it starts to come down.
Elon Musk's X or Twitter, whatever you want to call
it. Stop loss. Like if you don't know when to sell.
Financial
way to do it
within the app. Now this is still pretty preliminary.
Right, there you go. You have some volume there too.
But I do think that what does this mean for some of these up-and-coming trading platforms like a Coinbase? That still is a very good question. Obviously, this is still fairly new news. We got reports of this earlier today, but when it comes to Elon Musk's super app and what he wants to make all things X, I think that he seems like he's continuing to progress further here. But Coinbase, we are seeing expected losses at around 78 cents per share on revenue of around $643 million. The concern for this name is we've seen so many people discouraged from overall crypto trading, which has hit its most important source of revenue. But the battle really that matters the most to this company's investors will take place actually in the courthouse, because they have been dealing with a lot of regulatory concern. A pretty major SEC lawsuit has been facing this company for the last several months. But the problem is also that while crypto prices have rebounded this year, Coinbase itself has also rocketed about 160% since the start of this year. And that still has not been enough to excite some of these smaller traders. Analysts are expecting their revenue from their retail transactions to hit $270 million. That would be the lowest point ever reported by Coinbase since it became a public company back in 2021. Executives have also noted they've been able to extract more profits from trading volume that they are getting, but some analysts say that this pattern could be increasingly difficult looking ahead. So this name's up 190% off its lows. It's a volatile name, no doubt. We're down about 3% on the week into this report.
They did find support on that breakout.
To see, we oftentimes were saying this was a good gauge of the broader Bitcoin crypto space. It's sort of
I want to see it hold above that breakout level.
Yeah, a lot of regulatory uncertainty right now in this space, a lot of litigation taking place. It's really, I think, made sort of the marginal buyer or seller or trader of these products sort of maybe wait and sit on the sidelines. But
look at that, you got to retrace all the way back to the breakout.
Possibly for crypto and Bitcoin
doesn't always work that well.
Is that historically when it had
but when it does, that's a nice entry.
Upside, volatility would increase and volume.
Look, that's perfectly the 61.8% retracement too.
Much more mature
golden pocket
product this year, where the move has been somewhat contained. but the interest hasn't really come back. It's as if more now those who are involved in Bitcoin aren't really trading it. They're more, parking assets in it as the storage of value or as investment for something different than the US dollar or different than stocks or whatever it may be.
But this thing can just do it could just do a one-day pump.
Trading, you don't really want people to.
I'm liking the volume, and I'm liking that it's above that resistance though, which it hasn't broken in 4 months.
But
I'm thinking it's not a one-day pump like we've had.
Real trading volumes, I think, in these products for Coinbase to ever get back to anywhere near where it once was.
And absolutely, and even with this phenomenal surge to the upside this year, we're nowhere near all-time highs, which I think is a really good point. Our next name today, though, is Square or Block, and I can never get this name right, but what I do know is we're seeing some downside today. I would have to say tied to the weakness we're seeing in PayPal on the back of PayPal's pretty disappointing quarterly figures. But I will say, to give Block some credit here, shares have surged more than 20% over the past month, outperforming the S&P 500, outperforming PayPal sizably, as investors do become more optimistic about Block's potential growth, which is closely tied to the company's ability to not only expand their product offerings, but also the management's ability to enter some of these new international markets.
Don't reject it.
Is expected to report earnings after the closing bell today as well, but investors will want to know really how their payment ecosystem has grown amid some recent competition from rivals like PayPal. Now, originally called Square, of course, it's really known for its peer-to-peer cash app, which the company has rebranded alongside its name when they did present that overall name shift here. But it has been somewhat, I'd say, of a turbulent ride to get here for all things Block. Although we do continue to see this company build out Cash App as well as build out its decentralized finance business using cryptocurrency trading, it has been right now a slow growth story. We are expecting earnings at around 35 cents per share on revenue of just around $5 billion. Now this, in terms of adjusted earnings, would be an improvement on a year-over-year basis. We also are expecting to see an improvement in their gross profit with growth reaching 49% year-over-year back in their first quarter and continuing to expect that segment to grow. So this story has been still heavy growth we're seeing on a year-over-year basis. Alex, it's just, will it be enough now to please the street after the really nice run it's had over the last 30 days?
Yeah, we'll see if Cash App can be a point of excitement for this name, but the Block name change, I think, time has shown it was just a miss by management. I mean, they leaned into the blockchain and crypto stuff and basically marked the top, and it's like never been as interesting as it was. At least Square was like the core business that actually got investors excited for the longer term. But we'll see. So much negativity this year.
Oh, I think it got filled.
The stocks actually performed quite
nicely.
Yeah,
it got filled.
Particularly recently.
More GME shares.
So we'll see if that can continue.
Yikes.
We'll see if earnings can be the catalyst for
below the
potentially
breakout
more upside in Block, formerly known as Square. Also, I guess at least a Block is sort of like a three-dimensional square, so they're kind of in that realm.
I think that's how they justify it, but Square, just to me, identify with the company so closely to the ticker. Block, to me, I think of blockchain, which I'd be trying to move away from that whole image, but I guess that's still a major aspect of their business, no doubt. But our next name today is DraftKings, and DraftKings is expecting some pretty sizable growth on a year-over-year basis as well. We are expecting to see sales come in around 762 million, which would indicate around 63.5% growth from a year ago. We've also seen the consensus mark for losses move south by about 4 cents in the past 30 days, now pegged around 25 cents per share. The company's earnings, though, have beaten Zacks consensus estimates in 3 of the last 4 quarters, and they do have a trailing fourth quarter earnings surprise of around 15% on average. So we have seen some factors that could benefit a name like DraftKings: increasing global demand for online gaming and sports betting, which would positively impact, of course, their to-be-reported quarter. In the first quarter, they did successfully introduce mobile sports betting services in both Ohio as well as Massachusetts, and did manage to capture about 7% of the adult population in Ohio and around 6% in Massachusetts, which is also expected to be a tailwind for this company. But when I read those figures, I'm like 6 and 7%. I know that they're still growing in those respective states, but they still have a lot of market share they could stand to benefit from. They also do expect to break even on an adjusted EBITDA basis in their second quarter, supported by some fixed costs that are projected to only grow at a single-digit rate over the next year from this quarter. So this name has been focused on controlling some of its costs They dish out a ton of money for marketing, which we have always said you could speak to. DraftKings was sort of marketed absolutely everywhere, and now they've since scaled back a little bit, and so they have been focused on costs. Their CEO has been very transparent about the fact that they have not seen a dip in consumers' spending regarding some of their services. So that's been a positive trend, but we'll have to see if this company can beat high expectations, because this name, similar to Coinbase, it's up 160% on the year.
They had no choice but to spend a ton of money on marketing. This is a proven business model. The concept of
San Francisco treat
and being the house, we know over time has been a successful business model, but it's only successful with high volume and scale. So they've had to expand aggressively. They've had to get customer acquisition away from some of these legacy players in the space. And so it kind of was the cost of doing business, if you will, and it's going to be continued as they continue to robustly kind of expand across the world. Maybe in a way too, dodging the proverbial bullet, not being in Nevada this time around. I would imagine that a lot of the legacy players on their books had pretty big liability on the Golden Knights winning the Stanley Cup. Well, if you weren't actually there in Nevada, probably didn't have as big of a liability on that future. I don't know how much hockey's moving the needle, but it definitely, the Vegas casinos felt it a little bit with a lot of those bets in there. NFL season on the horizon. Big question mark for this company, I would say, Jenny, is what a rally so far this year, up over $30. This thing has been on the move.
It has been on the move, and it's been, I mean, the CEO's comments they gave now about a year ago saying that they were not seeing any hit from inflation. We'll have to see if that holds true, but it looks like from their chart that they have not been as affected as negatively as one would have thought. Our last name today, though, is Monster Beverage.
It filled the gap.
A pick that I was a little bit biased
still bounced off a level. I wanted to see it bounce off.
Their earnings, because if anyone is supporting
it's got a lot that I like.
Growth, it is myself, because I purchased.
I was just waiting for that gap fill, really.
Shares are up about 1% today, though, into this report. We've seen actually the consensus mark for this company's earnings move up about a penny in the past month. Also expecting earnings now of around 39 cents per share, which would suggest growth of around 50% from a year ago. In the last reported quarter, the company did deliver a positive earnings surprise of around 12%. But if you look at on the last trailing fourth quarters, they've delivered an earnings surprise to the downside of around 4%. They've been witnessing higher costs due to higher payroll expenses, as well as now purchasing aluminum cans from local sources. This has been a major issue for Monster for the better part of the last year. They've been also reeling under these supply chain headwinds due to the overall macro uncertainty, and have been witnessing a pretty significant increase in the cost of sales as a result of these elevated supply chain costs, and leading to their decline in gross margin and their gross margin rate. They did also say on their last earnings call that due to some of these higher payroll expenses, this has resulted in just higher operating costs. So those are all headwinds. This name is still considered one of the largest names in the caffeinated beverage space. They are sold pretty much everywhere. We talk about a name like Celsius that's now been trying to capture this market share. To me, Celsius doesn't compete. I know Celsius is like the cleaner option, but this name markets itself so well with like X Games. It's like all over your TV if you watch those specific, sporting events. So they've always been very well affiliated with some of these like monster trucks. I can just see the Monster logo on these these cars.
And motocross and
exactly,
stuff like that.
That's what I was looking for. So we'll be watching this name also reporting today after the closing bell.
Yeah, this is one obviously that you like. It's sort of your preferred method to consume caffeine. I'm old school. I stick with my with coffee. It's also my last name, so I might be obligated to do that. But Jenny, what really stuck out to me first off was I didn't realize the stock spread. It shows how often I'm really watching this one, but it has made a breakthrough beyond that just kind of action sports world. Much more common that you'll see someone in an office or a workplace with one of these than you would have seen maybe 5-10 years ago. $60 billion business, really, really impressive.
Mullen, boy.
You maybe leaning into Monster a little bit here for potentially an upvote, pushing on the scale a little bit.
1766 is the next little resistance on there.
That's an app I go on just too often, I would say.
So we have some good balance. We have an Alex Coffee pick and a Jenny
Horn pick. Your more major one is 20 cents though.
In offices because I've caught so much
glad I got stopped out of that one.
It's the same amount of caffeine as a grande cup of coffee.
We suck again.
So
I think I had a pretty good position on it too.
Unhealthy thing. I mean, there's chemicals in it, sure, but
that's where stop losses can bite you.
So we'll be moving forward today with our two upvotes. Those being, of course, DraftKings as well as Monster Beverage. We'll be looking at the technicals as well as some example trades.
You have to get good entries so you can have good stop losses. I like GNS holding there. Right on the brink. People don't know what to do with it. I like it. You don't know if it's going to do this when it's just ripping. It could have gone up to $2 and then consolidated back on $1.10 or 20. But it's usually good to get it after some consolidation. So here's a consolidation. You had the patience. I'm liking it. American audience intelligence for the show's failure. Nice. I'm a day trader. Oh geez, I hope I didn't do that. Scaling out's good though. Well done, sir. All about the scale. Target and Oxy? Don't they have earnings coming up? And a few Futile. Yeah. Target's just consolidating till earnings. Not much to see there. Wait till earnings to see what's going on. I mean, set up a bear flag here. This is bearish. You made lower lows. Broke that support. You're gonna have a little support on down here. So there weren't earnings. I would say could be continue to come down. See if it bounced on this support. Looks like it did already once at 125.08. For the long side, you want to see it break. You know, break this 138.25, this level. Gonna have a little level starting to form there. Might be bullish, but again, you have earnings coming up. Afraid of a halt down. Sounds like you've been a GME investor. Does Oxy have earnings also? Was it today? Oh, they missed? They missed, but had a big rally out of it, huh? So gap down with a rally up. I mean, you can see it's in a downtrend pretty clearly. All right, in the longer term.
Us, not calling you old, you're only slightly older than us. Walk us through what you're seeing here as far as DraftKings, though, ahead of their earnings today after the close.
Yeah, so Oxy looks like it's got a solid resistance up there.
Can't say I've ever used DraftKings, to be
Energy
honest with you guys.
probably going to come down with the market.
There, but I can help with looking
at
at
macro stuff going on.
There's been some notable price action.
Unless if there's
we've been traveling
more or
in a
some
rising wedge type
external
shape
factor we don't know about.
Yearly lows,
I would imagine it's near its highs.
So. And the rising wedge pattern, you know, it's got a steeper trend line on the bottom, a more shallow trend line going across the top around these highs. We had some tests to the upside here before our eventual breakout. Really, the 27 level
breaks the upside of this
could
go long,
to really take off beyond the boundaries that we had been
establishing.
Till that,
I would say it's probably going to come back down and test the support.
Once we slowed down a little bit near 29, then we had another gap.
Hard to say though. Good reaction to earnings.
Managed to make some new yearly highs.
Sounds like it missed.
32.45, but we've trailed off a bit since then. We've retreated to our 21-day exponential moving average, this yellow line today, and we've recovered a little bit from that point, but we're below the volume node that formed near the $31
Mullen's just consolidating
level
up here over
right
16.
Here. According to our volume profile study, we can see that that
good.
Was an area of heavy trading, kind of sideways price action for the most part here, with a bit of an excursion to the upside.
So Mary losing their credit rating,
largely staying within
about
over
100?
30 to 32 or so. So we can see as well the moving averages that we follow are two 63-day and purple 252-day, those ones are trending upward here. Our short-term 21-day EMA starting to flatten out a little bit, though, suggests this trend is losing some steam here. That's also reflected in the RSI, the relative strength index, our measure of momentum here. We can see that there was a little bit of bearish divergence in this name. Price was making new closing highs. RSI was trending downward.
From the lack of demand, I think that outweighs
signal because at the
credit
same
rating.
time, price was going into the overbought area, which is typically a sign of strength. So
a lot of demand
quite a
destruction
mixed
still
message there from this name. It eventually did play out to the downside, though. Momentum still tilted slightly toward the bullish side, but getting very close to that 50 midline here. So in terms of support and resistance, we can see here that if we were to give up that yellow 21-day EMA, let's zoom in a little bit and take a look at the price action on a closer scale here. If we were to give up that yellow 21-day EMA near the $30 level, perhaps the start of the gap near 29.24, this green dashed line, that was the high point we reached before that gap. That could be an area to watch for some support. Then we've got our pattern, but the 27 level kind of stood out to me too. That was about where we had our breakout from that point. That's also roughly where we've got our orange 63-day EMA as well. And to the upside, we'd just be looking to take out those old highs near 32.45. Our best close was 32.38. So anywhere between those two numbers would be something to watch for to the upside.
Right, and Rick, obviously this name has been on a pretty nice tear this year, like Alex and I were saying, seeing that outperformance, and it's just continued to run up with really no showing signs of stopping yet. So now, as far as trading this name goes, Alex, walk us through what you're thinking, perhaps looking to lean into some of the more opposite price activity. If you think this name has been a little bit overvalued at this point, you think things can come down, walk us through a more bearish leaning example trade.
Yeah, seasonally not the most I guess heavy sports betting time frame. It's basically baseball, that's it right now. So maybe that'll weigh on some of their numbers perhaps as well. But yeah, say you're just looking into that bearish divergence that you're seeing that Rick had talked about on the technical front. Say you see this as just a too far, too fast situation, looking a little bit bearish in general just because the stock's done so well. I looked at buying a put calendar below the market as a trade illustration, selling tomorrow, buying next Friday. And I selected the 27 strike, and that kind of corresponds back to a level that we had seen basically some sideways action for quite some time just a month or so ago. Also, with looking at this, that's about the market maker move. The market maker move is about a 10% move, a little bit more than that actually, about 11%. So say you see this sort of performing as the market is sort of priced in for a 1 standard deviation range. That'll target around 27 as well. Most importantly, this is an aim small, miss small type of a trade, Jenny. 20-cent debit means $20 in risk, and you can see quite speculative in the sense that you got to be right for this to be profitable. The apex of that profitability is right at 27. This is a super short-term trade, and it's highly customizable. So you got a different opinion. You want to continue to kind of bet on more upside in DraftKings, which has really been the story of 2023, which has been upside. Maybe look at a call calendar above the market.
Right, now to shift gears here and look at Monster, and I have a great stat that I seem to always get wrong, but so Rick, I'm going to try to get this right this time. This name over the last quarter of a century is the top returning stock in the S&P 500. So if you had invested back on New Year's Day of 1998 $10 in the stock, your investment as of New Year's Day of 2022 would be worth over around $27,000. So its average cumulative return over each year, actually on an annual basis, is around 37%, which puts it above both Apple, who's number 2, and Amazon, who's number 3. So I know those earnings are very important to us today after the close, but hey, maybe we should pay more attention to Monster here.
Yeah,
it's been an amazing run in this name since the time period you mentioned.
I'm still bullish on it because the supports it bounced on. It did break the resistance. It rejected, but I think the trend is turning around.
And we can see that there's kind of some clear areas on this chart to watch.
The volume
profile, the blue bar graph on the right side of the screen.
Of course, I should have day traded it in hindsight, but
at which we saw the heaviest trading activity. You can
I've been waiting for it to get down here
near 45.
and show signs of
very clear
reversal
area to be
for
watching
months.
here. Kind of this sideways price
I'm fine to
movement
hold.
around here. And then you can
breaking
see
this support I'd probably close there.
Stair step up type pattern almost.
That's the problem with getting bad entry.
Near the 51 level,
big range for your stop loss.
Action, then another big jump up, and the final node formed near the $58
I had a bigger range with Mullen.
See this large
not so tight.
spike right here in trading activity.
40% or whatever.
So what does this tell us? You know, we can expect that these are areas of consolidation potentially. They're areas where we would expect price to be more drawn.
I went back along on
they can be support and resistance in these areas here.
I know it's at the high.
Work our way through. So
full flagging
we're very
going.
close to one of these
big
nodes right now. We are a little bit above it. We're above all three of our moving averages. Our yellow 21-day, orange 63-day, purple 252-day. All of them are very modestly trending upward, though. So things are a little bit in the favor of the bulls right now. The price pattern in which we've been trading, though, is regarded as one of the more difficult patterns, though. We've got a broadening triangle. We've got two trend lines that are diverging away from each other here. One going across the highs, a steeper one going across the lows, pointing away from each other. So that gives us a bit of a quandary then. Our two targets are continually moving farther and farther apart from each other. We'd want to see ideally, you know, them moving toward each other because it would be easier to gauge where we might find a breakout. Now we've got a range that's increasing with time. But really, there's a couple other price levels to watch here, too. The 60 level, this red dashed line, that's about where price topped out a few times here and here. So that would be one area to watch to the upside. That would also take us into new yearly highs. To the downside,
on Mullen, I would probably
we've got our old lows to watch here.
Just near the 55-50
area.
Range of
so
built
that could be something
cents.
that we might be looking to for some support, or if you're bearish on this name for a downside breakout. So
like maybe even 16.
A few levels to watch there. 55-50 to the downside, 60 to the upside.
Right, and Rick, obviously seeing a nice lift today, up about 0.8% now into this earnings event, but we will leave it there. Appreciate the breakdown on the charts. As always, Rick Ducat, our chart master. So now trading this name, Alex, walk us through that a more neutral to bullish looking example trade. No bias aside, just looking at a different way to obviously play the earnings volatility today after the close.
Yeah, so no weekly options available on Monster. That is one thing to note. But even with that, not a ton of volatility juiced into this one. Market maker move is only $3 on a $58 stock for a name that, as you said, has been quite volatile, even if it has been to the upside historically. With that in mind, I looked at a neutral to bullish strategy, but it's really a neutral strategy. We just gave it a little bit of attitude to make it neutral to bullish in this particular case. So went to the August monthly. That is the shortest dated options available to us. And what we did was sell a 60-55 put vertical, which would be slightly in the money and $5 wide. And alongside it sold a 62.5 call vertical, which is out of the money and only $2.50 wide. So if you could collect at least $250 on this, you would theoretically remove the upside risk because you've collected more in premium than the width of that call spread to the upside. And so with this, you can see $250 in max risk. It's $5, the width of that put vertical net of that $250 credit. And then $57.50 is the break even, which is basically just 50 cents below where we're at. So that's why this is neutral to bullish, but it has an interesting risk profile where if it moves right to 60, this has a chance to capture that full credit or close to it, as that's where those two short strikes converge. Most importantly, it casts the net over this one, where essentially the break-even range would be anything above 57.5, but you basically have no profit above 62.5. So let's say there's a $5 wide range between 57.5 and 62.5, where this one could be profitable. Risk is entirely to the downside, and it is $250, as we said. Kind of a fun risk profile, and it shows how you can start with one strategy, change some of the inputs, and you can get a risk profile that, even though this is a neutral strategy, is set up in a neutral to bullish way.
Yeah, absolutely. I think really well put. And also important to keep in mind for both of our example trades today, they do contain multiple legs. That can lead to higher transaction fees. Short options can be assigned at any time. And carrying option positions into expiration can add risk, like unanticipated exercise or assignment. Now, coming up next, it's time to talk all things FOMO. So naturally, we are looking at one of the biggest post-earnings moves of the day. That will be Apple when they release their third quarter print. We'll dive into what the street is expecting more coming up next.
Feel me? Yeah, I just got stopped. Oh well. So he's getting $1. Yeah, I definitely think it's possible on GNS. What's your time frame? I think GNS could revisit $3, even $7. The volume today is not nothing. 38 million. Maybe it's kind of a pump and dump, but smoked prime rib French dip with chipotle mayo, au jus. 5446. All right, Bubba. Eggs up 2.7. $90-degree round of disc. Extremely cold. Not right now, right? Spice coming down a little bit here. Might be running out of steam. Mullen, nice consolidation up there. GNS built a head and shoulders. The 5 minute. Love VWAP though. Might suck back up to VWAP before end of day.
The 1 minute time frame and the run up we're seeing there up to, as I mentioned, just shy of $6. But take a look. Let me show you what caught my eye is, well, these areas of value, how they formed at every 50-cent interval on the way up. So again, a nice move here to just shy of 6. We're currently balancing around 525, taking a step back from the 1 minute candles because we don't want to get too married to the more granular time frame.
Here you can see
the longer term, more intermediate chart, and we've been in a bit of a downtrend since the beginning of April. We topped out around $8, have been kind of again chopping around 4.25. Every time we form one of these areas, again, the last chart we were forming them to the upside, in this instance to the downside, we're constantly referencing the prior area of balance to determine if we're seeing continuation or lack thereof. In this case, if we were to get above 6, we still have really yet to take that out. So kind of right up to a key area of resistance right now and pulling back a bit. It'd be interesting to see if the bulls get this one above that, because again, that would reverse this trend on the hourly time frame that we're seeing. Let's look at the longer term chart here, the daily, and you can see this goes back to the beginning of 2021. Look at the series of lower highs that we've seen. So this is now just trying to inch its way off a bit of a double bottom again around this $4 level. I'm really curious to see how Alex trades this one, because I feel like it's one of those examples where it talks about how kind of limited amount of reward if you're trading this one to see more downside, right? I mean, it's a $5 stock, but it seems like there could be a lot of upside here if something good were to happen, or if we were to build on some of this momentum we're seeing here today.
Yeah, and Ben, I think that longer-term picture really then puts in perspective this 24% move to the upside is sort of like a blip on the radar when you see the overall downtrend we've been looking at for this name. So really interesting chart, really interesting perspective on this move higher. But we'll leave it there. Appreciate the breakdown. As always, Ben Lichtenstein, the host of
Lichtenstein.
Back in Alex.
I see if Mullen breaks his 16
cents. We are talking all things Apple here today, as Apple is clearly, I'd say, the story of the day. It's down about 0.4%.
Up 8.5.
But will be interesting to see if they're able to beat this very high bar for earnings that has been set for them.
Yeah, it's a high bar, but it's flat year over year, and it's actually declined revenue. So the bar's like not that high, but it seems like it should be given the run up for the stock's earnings or stock price so far. Essentially at all-time highs. Valuation is very, very stretched on a historical basis, upwards of 30 times forward price to earnings. Long run average is closer to about 22. 2-year average closer to about 25. Both of those would target, of course, prices around 150 and 165 respectively. However, with this particular name, it seems no matter what they say, there's always buyers below the market. It's just such a core investment for so many that dips are almost seemingly always bought. Even looking back to last year, this one was an overperformer in an underperforming market. It didn't necessarily go higher, it went down, but it went down less. So it goes up when the market goes up, it seems, and it goes down less when the market goes down because there's so much interest in this. We've watched the maturation of the company over time, Jenny, where the iPhone itself seems to be more of a staple-like product as opposed to a discretionary purchase, at least in the fact of upgrading it. We're not rushing to the store to get the new one, at least I'm not. And I tend to use them until it doesn't really work again, then I get the new one. More staple-like, I would say, than discretionary in terms of that activity. Where
there's your flush on
iPhone
Mullen.
5, iPhone 6, all those ones, it
Back
was like you needed the newest one. If you didn't have it,
it'd just be a stop trigger.
You were behind the times, and it's just not the case anymore.
I would
don't even know which one
there.
I have. So as long as it works, it works. But we're going to be watching margins on this one, I think, Jenny. I think that's going to be a big part of the story.
I think margins will be a huge part of the story. The one
Nicola's
thing I will
down
say
some.
is I feel like the iPhones last longer than they used to. You used to need to replace them more because the software, you'd update your software and your phone would just like completely stop working. I have the iPhone 12, so now I have several pieces of my phone that no longer work properly. I'm definitely due for the iPhone 15. I've heard production delays could then push out that timeline. I'm very focused on the iPhone 15, which is also the key focus for investors. The iPhone segment does still represent around more than, I think it's like 60% of their overall revenue. So that still is the most important segment when looking at their earnings, but also then the VR headset, the $3,500 headset that I've heard you get very motion sick if you use. So that's been met with some mixed reviews. But what's been interesting about this earnings season so far is as of Friday, we have heard from 80% of companies are actually beating consensus. But what's so interesting than that is actually the post-move higher on average has been down about 0.2%. So even though we have seen companies collectively exceed what the street is pricing in, we're not seeing outsized moves to the upside. If anything, we're seeing just modest moves to the downside here. So a solid beat doesn't seem enough for some of these companies these days, particularly with these tech stocks after their really impressive rally. Apple is up about 47% on the year. It's down about 3.5% off its all-time high. One of the few names that's sitting at those key all-time highs with a roughly $3 trillion market cap. So they are also then facing pretty high expectations. Their push into financial services is one area of their business that I think is under discussed. It seems to actually be going pretty well. Apple did say in its high yield savings account, which is in partnership with Goldman Sachs, it's reached about 10 billion deposits since its April launch. But again, the diversification of Apple has been a very key story. I think iPhone 15 will be the primary driver of what moves the needle here. Also, their push into India, I think, has been one that's been really interesting to watch. When you look at the global smartphone market, only about 30% of the world has iPhones. So we give Oliver Rennick, who is like our lone Android user, so much grief about being the green bubble person in the group chat that everyone makes fun of. But I will say, when you look at the room that Apple still has to grow as far as its iPhone market penetration and global smartphones, 30% of the world have iPhones. That's amazing to me.
The other, though, parts of the world, you're the odd one out if you have the iPhone. So they're having the same troubles breaking into those markets as maybe the Android kind of driven devices are having in the US. That's something to monitor and to think about. We're kind of prisoners of our own kind of bubble that we live in. That VR headset, look, it could be cool. It might sell a ton. It can't sell enough to move a $3 trillion market cap. It's just not a big enough, it's such a niche item. I know it's got the huge price tag, but this company is just too big. That is too fringe of a product for it to really be that important. Service is going to be huge, as you talked about. Big beat there, could be big for the stock. That'll also help the margin story. But with this one, more than anything, Jenny, it might even come down to what they say about AI, as that has just been such a critical piece to the story in 2023, and we know all those rumors that Apple's working on things behind the scenes. We'll see if they talk about it on the conference call.
I know, and I feel like they've actually under-discussed AI, and I know obviously they're planning on pushing into AI. They are the tech leader as far as most innovation goes, but in terms of like Alphabet and Microsoft and NVIDIA and AMD, they have not discussed AI quite as frequently, so I'll be curious to also know how that then boosts their different product offerings. And if Apple's a bubble, I'm definitely in it, Alex. I mean, I have all of the different things. I frequently break my AirPods. I cannot live without those things, so I'm constantly buying new ones. They go through the washing machine like once a quarter at this point. But walk us through what you're thinking as far as trading this name goes, because there are a lot of eyeballs right now on Apple stock, of course.
Yeah, I'm on record. The best discretionary purchase I've ever bought versus the expectation is the AirPods, and I stand by that until something comes up to take that spot on the throne. But August 4th, so tomorrow's expiration, just selling an iron condor, $5 wide. This is a straightforward strategy, 2 credit spreads surrounding the stock. Market maker move isn't huge for this name. It's about $6.50, so that's going to target upwards around that 97.5, 98 level, which is our short strike on the call side, and then it's going to target around 85 or so on the downside. That's our short strike on the put side. Break evens 183.5 corresponds to those former all-time highs in the stock on the chart, and then of course 199 would be up there towards new all-time highs that really gets up against that $200 mark. Total risk, $350, $5 widespread net of $1.50 credit. Risk profile, it's plateauing surrounding the stock. That's the max profit credit received. Risk on the outside in both directions. We talk about the iron condor all the time. This is the classic neutral earnings type trade.
Right, I think a fairly nice way to play this name into earnings, because I think we are bracing for a lot of volatility here. But that does it for our FOMO segment. Now, coming up next, we will talk a name that has already had its quarterly earnings, and it seems like it's going fairly well. We're looking at Wayfair with a nice surge today, continuing to soar on the year after a really strong second quarter print.
All right, SPY's come down a little bit here. Did have a double top there where I tried to go long for the breakout. Stopped out of that, made it open short. Back to flip bearish, got right under the 9. Look for kind of a right shoulder to be formed over here, a head and a shoulder. GNS showing some support. Mullen back down to VWAP. Rad. Looking rad. Holding a nice level. Still building the rest of this cup. Mini cup in a much larger cup and handle. Eyes coming down a bit.
It's a big winner today after earnings. It's up about 20%, already off the highs, but still seeing a really impressive run after earnings came in better than expected. Actually reported a surprise profit on better than expected revenue. Should note Wayfair now up about 165% year to date. Still a long way off its COVID highs when it was trading higher than $300 a share, but an impressive run up nonetheless. In the earnings release, Wayfair says it's working to lower costs, focus on basics, and earn more customer and supplier loyalty. And those efforts appear to be working both for Alex's mom, but also in terms of the numbers that they posted. Adjusted EPS of 21 cents, topped expectations of a loss of 69 cents per share. Revenue did fall 3% to $3.17 billion, but analysts were expecting a steeper drop with forecasting revenue of about $3.08 billion. Wayfair reported 21.8 million active customers in the quarter. That was a decline from 23.6 million in the year-ago period. But you can see revenue per active customer rose to $545 from $537. Meanwhile, gross margins came in at 31.1%. That's the highest gross margin that they've ever printed as a business. And they pointed out it's not because of an unexpected surge in demand, but rather their cost savings initiatives, which we know have included several rounds of job cuts or several job cuts overall. Wayfair ended the quarter with free cash flow of $128 million. That compares to free cash flow of negative $244 a year ago. But going back to demand for just a second, on the earnings call, Wayfair said it thinks the momentum it has in the business is very sustainable. Now, in terms of Q3 guidance, Wayfair said quarter-to-date gross revenue has been trending positive low single digits year over year. So in turn, they expect a net revenue growth in the mid-single digits for the full quarter, and then gross margins to come in between 29.5 to 30.5% for the quarter. I should note that Wayfair is holding its first ever Investor Day next week on Thursday, so that should maybe shed some other commentary on the outlook and some of the growth initiatives looking forward. But overall, this report sending a company that's already seen an impressive run higher, even higher today. Shares up about 19% right now on those results.
Yeah, and I'm not a chart guy, Caroline, but a pretty nice, it seems like, breakout from a level that had been pretty critical. New Mission Impossible movie, right? That's the one that you went and saw, I'm sure.
The Barbie movie, of course, and I saw Jenny's review on Twitter. I I really loved it. But going back to Wayfair really quickly, Alex, I do want to mention that it did get a double upgrade from Wells Fargo following those results, upgraded to overweight from underweight with a price target of $100. But get this, its previous price target was $35. So definitely behind this uptick all year. The analyst says Wayfair's sales and EBITDA progress is real, and its multi-year upward revision cycle is just beginning. Calls Wayfair a high-growth, share-taking asset with real profit levers and upside catalysts ahead. Should also note that Gordon Haskett upgraded it to buy from hold. Its price target is now 110, and Canaccord kept its buy rating but raised its price target to 98. So analysts still pretty split between buy and hold on this name. 40% have buys, 55% have holds, and the median price target is now $70 a share. So take a look. Wayfair currently trading just below $87 a share. So still the median price target is far below where it's currently trading. We'll see if other analysts play catch up anytime soon.
Caroline, I'm going back to our movie theater conversation. I'm just so glad that you went to the movies and we could finally speak about that. But okay, I think my review was initially too harsh on Barbie. I was just more team Oppenheimer, but I can respect the enthusiasm that it's definitely driving all of movie theaters right now. So I think it's a win-win story for all, but we will leave it there. Appreciate the thoughts and that you went to the movie theater. Caroline Wood, senior markets correspondent for the network. Coming up next, we will preview WW International ahead of their second quarter report, expected out today after the closing bell. Kevin Green will have more on that name for us coming up next.
Yeah, GNS breaking down there. Dang, maybe it was a pump and dump. Daily pump and dump. Barbecue doing? Let's see, Mohammed. Barbecue sauce down 5%. It's headed down. I'm waiting for it to find support. Maybe it'll find some at 23, 27. More major support would be that 1750 area. It's now entered a steeper downtrend also. Whoa. Like that. So breaking this low here, basically where it is right now, you're breaking the neckline on this head and shoulders, which basically today is below the neckline. Chipotle mayo. Mayo ruins everything. It's disgusting, even if it's Chipotle mayo.
prescriptions for these weight loss treatments, and we have seen the fact that Ozempic and some of these other players within his name have seen a huge amount of demand.
Like on the day?
Actually can't really keep the
no, not necessarily.
At this point in time. So that is looked as a opportunity to bring in.
They have earnings coming up. Whatever you have, I'd get out of before earnings.
At the end of the quarter, last quarter, they actually had seen a decrease.
And how this candle closed on the daily, that's not
in subscribers.
very bullish.
So we want to be able to try to boost that number back to the upside here, and this might be the opportunity for them to do it, which is why we are seeing a significant amount of call side skew, meaning that the market is really pricing in a more of a movement to the upside rather than a downside here post the earnings announcement.
You know, Kev, this is one of those kind of forks in the road, it seems, for this company. They can go the way of a company like Sears, where you just aren't able to adapt to the times and you kind of know where that one ends. Or they can do something more like a Roku, where Roku seemingly has always been sort of one step ahead of where their current product is and where it's going, pivoting from sort of the stopgap device to a software company very, very effectively. It's too early maybe to say, but it sounds like this is a pretty critical step if they can get some buy-in from consumers moving this direction. But I think it's also nice to see a name that's done quite well so far this year that doesn't just have AI somewhere in the description here, Kev.
Yeah, I mean, at the end of the day, when you're talking about these weight loss drugs, they are being able to reduce and shed weight in a pretty quick amount of time here. But the key is that you always have to actually take them pretty much for the rest of your life to keep the weight off. If you stop taking the treatments, that's when the weight gain is going to happen, and it happens actually pretty rapidly as well. So that enables Weight Watchers, or WW International. I'm old school. I keep calling it Weight Watchers. My apologies. But that allows them to have a constant revenue stream from their subscribers. So not only could they be, not only can they bring on new subscribers, but those subscribers that are utilizing those treatments will tend to probably stay utilizing those treatments as much as they possibly can, and that's going to be obviously a positive impact when it comes to this company here. I do find it very interesting. You brought up Roku and Sears. I do find it very interesting though that they're trying to go away from the old school meal plans, trying to work out having social connections in order to try to lose weight and just going immediately to the medical route. I just find that to be a little bit fascinating, and I don't think we should ever lose the fact that you know, eating right and working out is also another benefit that we could see as far as trying to manage weight and stay healthy.
But we've also gotten some data in recent days that has sort of disconfirmed that kind of transitory Goldilocks 5. Most notably this morning, obviously, we got the ISM services number that came in at 52.7. That's a two-month low in that statistic. We also got the ISM prices number. That number was 56.8. That's also a three-month high in that statistic. So we're moving in the wrong direction from this perspective of transitory Goldilocks. But that's not all. We also got a lot of data that was incrementally supportive of this sort of transitory Goldilocks 5. You got jobless claims coming in at 227,000, continuing claims coming in at 1.7 million, obviously very supportive, says there's no recession in sight.
So at this point now, I'd like to break it down piece by piece because, you know, there's a lot of push and pull that's happening here. The first thing I saw when you were talking about the dollar and VIX are overbought. I mean, I'll just use the VIX, for example, because when you wrote this and what's going on right now, the VIX is up over 20% this week. It was around the 13 range, and now today it's in the 16 range. You know, when you say the U.S. dollar and VIX are overbought, what do you mean, and where do you think they're heading, and how quickly?
Yeah, that's a great question. So that's a short-term quantitative signal from a model that we run here at 42 Macro. And what that effectively means is if we remain in this is the same regime of volatility and price for both of these assets, this is a great spot to be tactically fading the rise that we've seen in recent weeks in the dollar and the rise that we've seen over the last week in the VIX. Now, that's obviously incumbent upon us remaining in the current regime of price and volatility, not only for those instruments, but broadly speaking from a top-down market regime perspective. Markets have been pricing in what we call reflation over the past sort of 6 months, and that's a condition where growth and inflation are accelerating simultaneously. That's not what's happening, but that's what markets have been pricing in, and it's obviously been generally supportive for the backdrop for risk assets. And so again, going back to what the medium to longer term outlook for markets are, you have to sort of understand, hey, what are the narratives that are driving the market, and how are those narratives either being confirmed or disconfirmed by incremental data? On the incremental data front, we obviously got Apple and Amazon earnings. Those will be big, important indicators on the micro front tonight, but obviously the jobs report tomorrow will be a big incremental indicator for the macro data as well tomorrow.
Yeah, without a doubt. I mean, there's so much to take in here, and when you talk about fading this and these different models and the signals that you get, how would you quantify how you are feeling? I mean, it sounds like you may be a little more positive than negative, but how do you quantify how you're feeling about the market?
Yeah, that's a great question. So we don't feel anything here at 42 Macro. We're all quantitative, systematic investors, but just in terms of what the output of those processes is signaling right now is that we are still in a risk-on regime. We're obviously correcting within the context of a risk-on regime, and it's our job as investors to analyze and interpret the incremental data to suggest how long this risk-on regime may last. It's our view that if in terms of what's likely to just really cause the risk-on regime to dissipate is really a return of inflation pressure. Because you go back to what's really supporting the transitory Goldilocks 5 that has been supporting the stock market and credit markets all year is the fact that we've had this immaculate disinflation. Well, we've got some incremental data on the inflation front this morning. Whether you look at unit labor costs, came in at 1.6% quarter over quarter annualized. That's the lowest number we've seen since the fourth quarter of last year. Yesterday's ADP report showed the median annual pay for job changers, which is the number we care about, actually slowed pretty sharply, 110 basis points to 10.2% year over year. That's the lowest number we've seen since July 2021.
Nice, Cameron. Well done, sir.
The incremental data is still
Brad,
supportive,
up a little bit.
On balance of more immaculate disinflation, but we do have a feeling, or based on our qualitative analysis of the economy, that immaculate disinflation process is likely to conclude by the end of the year. And if that immaculate disinflation process concludes, then we're going to have a serious conversation about how long the economy can remain resilient, because ultimately that just means we're going to have more and more policy tightening that pushes us into that recession.
Well, that's a tough scenario because, I mean, the idea here is that we're in a risk-on environment, which you said, until that inflation starts to change direction.
Close my puts there.
The disinflation, how it's been coming down and going in the right direction, but there are signs still that there is inflation. It's real and it could go higher.
See where it wants to go from here. Could go either way. Could go short with its head and shoulders, or go long, continue this uptrend.
And you're talking about
Still don't want to dance around BWAP.
And more of a tightening policy. That's not very encouraging for markets, right?
Well, it's not it's not encouraging for the bond market, and we've been all over this call on the bond market, which is trying to get investors to avoid overly allocating to duration risk at this particular phase of the business cycle, because we understand that the economy is remaining resilient. It allows the Fed to continue tightening monetary policy, and oh, by the way, when you look at what's priced in the money markets and you look at what's priced into the long end of the bond market, it's priced to perfection. We already got 200 basis points of rate cuts priced in on the short end. We have a deeply negative term premium on the long end. We have 2% inflation expectations priced into the long end as far as the eye can see. So if you're buying a bond here today,
thoughts on Apple? I haven't had earnings yet.
Case from this particular starting point? I mean, it'd
it's
be like
extremely high.
S&P at like 35 times earnings.
Yeah. Thank you so much, Darius Dale. Great to
see you.
TA
is bearish on it. We've got really 3 RSI divergence here.
Appreciate you, Nicole.
Actively flipped bearish. You've run into the 9 moving average, but it's earnings, so I don't know.
Elon Musk's new venture. You want to hear more about that?
Barbecue down 2.7.
Healthcare and industrials in your portfolio, and why one
Mullen came back down below VWAP. And some pump and dumpers today.
And our panel
Be nice. Down a bit there too.
That could tell us more about the economy.
Brad's on a pump and dump.
What's the outlook for Amazon? And up next, Charles Schwab's Jeffrey Kleintop joins us with some key things to watch. Of course, tomorrow is the key jobs report. That and so much more. Jeffrey Kleintop next.
Owning Berkshire gives you a discount on Geico. That's awesome. That Warren Buffett guy just thought of everything, huh? Good thing, Jay from the Bay. Wow, 2:15 already. That's what happens when you get a late start. Day flies by. MSGM breaking new highs there. See if it fully makes this cup.
First and second quarter. That's a name that has been on the move. And last but not least, here's a look at Bitcoin, which is still below that 30,000 mark. I'd like to get right to our next guest with a global footprint himself, and that is Jeffrey Kleintop of Charles Schwab, Chief Global Investment Strategist there. Jeffrey Kleintop, great to see you. Thank you so much for being with us. Just wanted to get your view. There's so much to talk about. I mean, rates are on the rise here. You have back-to-back losses, the Fitch downgrade, and what's been going on with the central banks. But I think I want to start with jobs because that's in your notes too, and that's a very telling story. We have a jobs report tomorrow. Where do you think we stand in this labor market?
You know, maybe this is where we can connect the earnings reports and the economic data coming in. You know, so far we're seeing a relatively sluggish growth outlook for the third quarter from economists. And that's because maybe the slowdown we've seen in the economy, which has been concentrated in manufacturing and trade, why I'm calling it a cardboard box recession, seems to be coming out of the box and spreading to the formerly healthy services sector of the economy. The ISM Services Index and the PMI for services both fell here in the U.S. today. They've been falling for 2 or 3 months now in major G7 economies. And since G7 economies have more services jobs than manufacturing jobs, a weakening trend in services could undermine the job market. And the commentary from business leaders on earnings calls so far this reporting season reflect layoff discussions outnumbering those that talk about labor shortages. We're hearing from drugstore chain CVS have layoffs, InBev, the parent of Anheuser-Busch, Biogen, a biotech company, money manager T. Rowe Price. So it's not just concentrated in tech. And this will really focus attention on Friday's jobs report in the U.S. and Canada. Do we start to see some signs that the service sector slowdown is showing up in corporate layoff announcements?
Yeah, and I wrote that in my notebook with the layoffs more than need jobs. You know what I mean? And that's the whole thing. When you have an environment where you start talking about layoffs, it starts to get a little sketchy. And you're watching the other indicators. You've had an inverted yield curve. You are seeing the yields are on the rise now, particularly on the heels of the Fitch downgrade, which follows the 2011 downgrade of S&P. What do you think is happening there?
Well, I think when we take a look at the rate situation or the yield situation, I mean, the irony is always that when you get a downgrade, whether it's in the U.S. in 2011 or in the U.K., a downgrade from AAA in 2013, it's had more of a negative impact on stocks than on bonds. We certainly saw that yesterday. We're seeing some follow through today. I think the risk is that we've got very low VIX and a very low V stocks. That's the VIX in Europe. They were extremely low. In fact, just going into this development from Fitch, they were the lowest they've been since January of 2020. That's pre-pandemic. So what we're seeing here is so many market participants were short volatility, short near-term volatility. Remember, that's what this is. It's a measure in the options market of how the market's looking at the risk of a sharp move in the market in the near term. And with too many market participants shorting volatility, if there were any kind of unforeseen development, you could see a real spike in the VIX, and it's coming in August, which is a month known for light trading. So that surprise downgrade is one of these triggers of this rebound in volatility, but there could be more to come. We've talked about the risk from El Nino. Many other factors could unfold over the coming weeks. And volatility, though it spiked a little here, still remains relatively low for the environment that we're in. And that's why I think there's still more risk to volatility on the upside.
Yeah, and it makes sense. I mean, especially when we were over 80, I can see that on the chart right there. And right now, we basically went from 13 to 16, right? We're up about 21% week to date on the VIX, but even 16 is generally relatively low for the VIX overall. I think you make a great point there. What's going on, and why are we following Brazil and Latin America? Is it what they do, then we do?
Well, it sure seems that way lately. I mean, obviously, there are plenty of differences between Latin America's economy and North America's economy, but yet there has been a leading relationship here. So just yesterday, for the first time, Brazil cut its policy interest rate, and followed a few days ago, I think it was Friday of last week, Chile cut their interest rates. Now, inflation's eased along with growth in Latin America. We're seeing that here in the U.S. Those countries with rate hiking cycles that led major developed market central banks by 6 to 12 months are now beginning to implement rate cuts. So Brazil began hiking rates back in March of 2021, 1 year before the Fed exactly, and ended those rate hikes in August of 2022. Looks like exactly 1 year before the Fed. So if that pattern continues, maybe the Fed might begin to cut rates in August of 2024.
Now, as we are waiting for more on the Fed, and that will probably
got this inverse cup here. They've got a nice short entry for a handle.
At that point, we've noted what's going on in bonds. You have those short duration stocks that seem to be outperforming, and those are the ones with more cash on hand. They don't have to borrow in a high rate environment. What do you tell folks about investment strategy? You know, which way the market's heading, how to be hedged and such? Is it more of a play here at home, maybe abroad?
I think you want to focus on those companies with low price to cash flow ratios because they're priced for imperfection. They've got a lot of strong cash flow. They don't need to worry about borrowing in this high interest rate environment. What we're seeing is these short duration stocks, the higher quality stocks, meaning they have a lot of cash flow and can fund themselves. They're back in favor again after they underperformed from March through May in the aftermath of those bank failures. Short duration stocks, those with the lowest price to cash flow ratios, have outperformed since interest rates began to rise back in August of 2020. And they've continued to do so with a little interruption there, March and April and May of this year. But they are back to outperforming again as rates are climbing. I think the risk in the market is if we continue to see this rise in rates, those long duration stocks are going to be most at risk here. So I think you want to find those cheaper stocks that are priced for an imperfect environment that we're in. They're the ones we're finding outperformance. You can find those across all sectors and countries, but they're more concentrated outside the U.S.
You know, I was hearing, and this is just a final sort of big picture thought. So we've been downgraded by S&P and Fitch. Fitch was just somewhat expected. I mean, they sort of alluded to it in May. And there's only Moody's left. They still have us at AAA rating. But a lot of talk from folks on Wall Street is how it's not really affecting the markets and no one really cares per se in that sense, but more just the bigger picture about our children and our children's children and the debt of our country. But all the countries have debt. What are you hearing about some of these big picture thoughts?
Well,
Brad's moving up there a little bit.
Next, if
breaking
you take
that resistance.
A look at Japan, I've always kind of referred to them as the canary in the coal mine when it comes to debt relative to the size of their economy. It's double what it is in the U.S. They've first went to zero interest rates back in 1999. Then they went to QE in the early 2000s. We followed those moves. Then in 2016, Japan adopted yield curve control, essentially to push down long-term interest rates so that they were affordable and in theory would stimulate their economy. Seems like we follow everything the Bank of Japan does with a lag of 8 or 9 years. So who knows, maybe in the next year or two, we would adopt yield curve control to keep a lid on long-term interest rates so we can continue to afford all of this debt in this country. And maybe that we see the same thing in others as well. I mean, I'm not forecasting that necessarily. I'm just saying Japan has been a really interesting leading indicator of policy when it comes to debt and how we manage that.
It is. It's very interesting. And of course, you have Janet Yellen just calling the whole downgrade arbitrary and outdated data and things like that. Okay. Always a great conversation. Jeffrey Kleintop, love having you on the show each week. Thank you.
Great to be with you, Nicole.
Thank you. Coming up next, we're taking a closer look at AI trends. We know how hot AI has been, and now what? Elon Musk is back at it again, a big push into the AI fields for something else, and the competition. We'll talk more about it coming up.
Alright, it's pushing up there a little bit. Mullen's below VWAP now. VNS is down there. Wow, Confluent continues to melt up. Almost 16%. $230. Only an hour and a half left. See if we can get this inverse cup and handle to play out.
Reportedly been in a place where Elon, when pitching researchers, was discussing potentially massive paydays if this is actually successful through issuance of stock options to try to recruit in researchers that will bring some of the best talent in the industry to this venture. Now, what will it do? Again, we don't really know yet. Based on what we've seen on the company's website and mission, it looks like they might be taking more of a mathematical physics approach to creating AI and creating generative AI, if that is the direction they go in. But right now, we are waiting, we are watching, and we're looking forward to seeing what comes next. Because the bench of researchers they have is something to watch.
Yeah. Look, I mean, politics aside, AI is driven by people who are sort of bringing it to the world. And you have to wonder about the people that are bringing it to the world, and you have to wonder what their intentions are. And so my question to you is, as you have Elon Musk here talking about truthful AI, most truthful AI, do you think his intentions are generally pretty good?
It's a question that I think we'll have to see what product is ultimately built and what is released.
Got an engulfing candle there too on the 5-minute on SPY. The red engulfing.
The models that have been released and the technology that is being introduced to the world in recent months, recent years, and going back, I mean, you can trace the lineage of artificial intelligence research back decades now. Generally, it's been towards a greater good of trying to enrich the human experience, make machines smarter, make it possible for us to automate some rote levels of work or to augment what we do as human beings in our day-to-day lives, benefiting us in everything from certainly the iPhones, the technology we use in devices every day, to how we are also interacting with software in the cloud. It's become ubiquitous.
Barbecue down 3.
Innovations that we see, we don't know if it will be good, will it be bad? I think ultimately that will depend on how it's applied, not just by the teams creating all of the models and the machine learning capabilities, but how enterprises and businesses apply it, and how countries ultimately also begin to regulate this. Because that
keep an eye on you this week, Mullen. Next week.
The good, the bad, the morality of artificial intelligence will ultimately be determined.
Yeah. You have names like CrowdStrike and Dynatrace here too that you're watching. You know, of course, you have regulators watching all things AI. You've seen some of these AI
Brad hitting some resistance there.
Related, doubling, for example, like NVIDIA. Which ones are the best of the bunch in your opinion? And I just wanted to hear any other thoughts that you may have on some of these names.
Yeah, thank you for that. I think what we've been looking for is an opportunity right now to invest into the proverbial picks and shovels of the generative AI movement, because there's very few products right now on the market at all that are generative AI and that give you direct exposure to AI.
You guys got tinfoil for me in media?
As an opportunity to invest into the infrastructure that is building, or rather is used to build machine learning models. But in addition to that, we've taken a broader look at the space And we think that database software is actually one of the better ways to be playing generative AI as a trend.
I shared
Within
Jenny's
this, we think
Instagram.
that we pick MongoDB as our top pick for exposure, positive exposure to
Twitter X is
generative
planning on
AI
launching its own
trend.
stock trading
We think that the
platform.
company's document database, in addition to its recent announcement of Atlas Vector Search,
Gotcha, Missy.
position it very well to be the foundation upon which you can build generative AI applications. Secondly, CrowdStrike, another name outperformed rated by us. We think that as generative AI is adopted both by good actors as well as by bad actors, those attackers, hackers, etc. out there, that you are going to need much better, and rather the best of breed endpoint security software, which is CrowdStrike. Because as we've already begun to see, fraudulent campaigns,
What am I looking for?
phishing campaigns by attackers are becoming smarter, they're becoming better, and it's becoming more difficult to tell them apart from real communications and real outreach by humans, especially in a day and age where you can take a 30-second snippet of someone speaking and completely mock up their voice via artificial intelligence. So the world is getting more difficult.
We're talking about Twitter, yeah.
From
yeah, Cameron mentioned that earlier.
We
Someone.
need good security, and CrowdStrike is our choice.
All right, thank you for all of that, Fred Havemeyer of Macquarie. Really appreciate it.
I just see Jenny's
Thank you for being here talking
Insta or whatever.
AI. Thank you. All right, coming up, we're
What
going
did
to talk about large cap ETFs.
Superstock predict years ago? Did Twitter have a trading platform?
When it comes to mega cap tech
I don't remember that. There's our SPY, there's the inverse cup, inverse handle. Could take profits at VWAP or could hold. Hold. See if we break VWAP here. If I was faster on this platform, I would like to add, but I'm just not fast on here. It's impossible to be fast on here. First take profits area. I'll take one. I'll take one, Bob. Move my stop loss to break even. A pretty good bounce there. See if we can build a little head and shoulders now to flush us through VWAP. Pretty solid bounce. That's why the cup and handle, you gotta take profits at the cup to revisit in case it doesn't bust through like Rad maybe about to do. I hope it busts through though. This is such a big cup to break. Yeah, it's looking so nice.
reluctance here. So it'll be key to watch today with Amazon and Apple. I think the markets are just kind of in a bit of a holding pattern as we await those closely watched earnings and the non-farm payrolls data tomorrow. Speaking of a bit of a
stop me out of the rest.
you can see we've gone a little bit more sideways over the last couple weeks.
Well, I'll take profits off at least one contract.
July June and into
the break even was
July for the most part,
including my
from the S&Ps holding above
trade
the
from earlier where I was down on it. So
take a look at the quad chart because this shows all four. You've got the S&Ps
that makes sense.
down on the top half of your screen, the Nasdaq and the Russell on the
this
lower
entry
half.
It wasn't break even. It was still
really
green on that one.
We're just now kind of inching our way off those recent highs, new highs for the year. To be very clear, and I think there's again a lot of anticipation ahead of the numbers tomorrow, the earnings tonight. But here you can see the VIX, right? A strong move up, but still at 16 and still holding below those series of lower highs that we've seen. So volatility, I think, a reflection of the indices, which again are off the recent highs, but not by much, Nicole.
I don't want to look at GNS.
Right, understood. And we were talking earlier about the rate environment with Jeffrey Kleintop. What jumps out at you is we have the 10-year above 4% again.
Well, the recent run-up and that key threshold that we've gotten above, but also really how the indices, and we just looked at again holding
borrow
those
fee
highs
isn't
for the year, really
hasn't climbed
the run-up that we've seen in rates this week. I've got the 10-year
really
yields
on GNS
right now,
a little bit, but not really.
Up to 4. Well, just
available shares has come down though.
Today, these are 30-minute candles,
that's good.
And just look at over the last couple of weeks here, the trajectory to the upside that we've
Dividend?
seen. Taking a step away from the more intermediate look at the run-up in rates. Again, 10-year yields
Never
here
heard of that.
up to just shy of 4.2%.
Oh yeah, that's right. They were talking about that. Never mind.
Daily candles.
That was part of the reason for the squeeze.
Your screen here now.
Maybe it was squeeze the shorts.
Is the 30-year, the right half. Again, that 10-year yield we just looked at, as it's just shy of 4.2%. But what really jumped out here is look at how we're taking out these highs from March of this year, inching our way back up to October highs of last year. We're back to levels we haven't seen since November of last year. And Nicole, as I look at this,
that's crazy. I never remember that.
Back on November 9th, basically the last time we saw the 10-year yield up to this level.
I mean, you predicted enough stuff, you're gonna be right.
They were trading below 3,800, so that's what's jumping out to me is really how investors have just focused on the positive, better than expected earnings.
Yeah, GNS, dude, it wants to go green to red.
Strong economy here in the U.S. The jobs number this morning
suck again.
also really strong, but at some point something's got to give here because the indices I think are going to struggle to continue to go higher if rates continue at this trajectory.
SPY just chopping around now.
Thank you, Ben. You make a great point, right?
Building up some liquidity on this right shoulder.
Where we are now when we're looking
got 20 minutes to power hour. Might get a power hour trade.
46 to 4,800. So we will see. Ben Lichtenstein, thank you.
Lichtenstein.
Now let's talk about some trends that you should be watching. Kyle Balkasoon is with us, portfolio manager of the Hennessy Stance ESG ETF. I'd love to get to some of the holdings, but I'd like the bigger picture first. How are you feeling? And has the Fitch downgrade or this recent sell-off changed any part of your outlook?
Outlook hasn't really changed. Going into this year,
we had
a relatively
options kind of suck on it though, honestly.
Conservative-ish estimate in terms of
I don't like the
revenue growth.
5% spread between everything.
Consumer to hold strong, which they've had. We still foresee, I'd say, average top-line growth in the S&P year-on-year of around, I'd say, 1 to 5% over the next 6 months. So we still see some positive growth. We think earnings will actually increase over the mid to longer term as companies get more efficient. We think a lot of the AI wave is we're going to see a lot of what I call workplace
tough word, went back to red.
Productivity enhancements, automation.
Yeah, kind of inverse head and shoulders being built here.
Smarter and better. That's where we
see if it holds that right shoulder.
And in the near term. So I'd say that's kind of one of the biggest first trends. The other one we see is their yield curve should eventually normalize.
Tempted to play this a little bit.
Start to get used to seeing relative, very attractive yields on the short end of the curve. So I think they're going to start to take advantage of that, and shape-wise, it should start to eventually normalize, so it's not inverted anymore. I'd say that's kind of the two big macro trends.
Let's talk about some of the investing trends because, I mean, there's no doubt that AI has been very hot, and you noted that people like some of these names, like some of the Magnificent Seven. Do you see a pullback like what yesterday, for example, the Nasdaq was down 2%, its worst day since February. Are those buying opportunities? Are you telling folks that maybe that part of the market's enthusiasm is pausing?
I think thematically, it's not a bet I would make. I'd pick some winners and losers. I think there's going to be
It's not part never even reverse split or anything.
clients, real solutions that are being deployed and are growing.
It really is like a value play.
I'd say Microsoft is actually very well poised in that they already have selling agreements for their products at most of corporate America. So they're pretty well positioned to be able to capitalize on their tools in there. You have some names that are more speculative. I'm not going to name them specifically, but you don't see a lot of revenue, you don't see a lot of clients, and do the products actually work? So I think there's going to be over, I'd say, the mid to longer term, as the hype kind of tends to fade and we get some earnings and we start to see which companies are real, who's showing real growth, who's showing real clients and products and solutions that work.
So let's talk about some of the holdings that we can highlight. I mean, I know Microsoft is in there and you just finished talking about some of the tech. Is Microsoft a little different?
I personally think that Microsoft is going to show strong growth. They're everywhere from a selling standpoint. They have the relationship and they have the capital base to actually deploy a lot of this tech. Their partnership with OpenAI is probably going to yield some interesting products as that flows into the Office stack. I mean, if you think about it, we all remember that annoying thing in Office called Clippy. So they actually
do have this inverse head and shoulders still on here,
and I think they're going to execute well,
which could be playing out.
Another trend and holding I'd say that's of interest to us is on the healthcare front. We do think the aging population is going to require more and more products, services, procedures, and we do view that as kind of I'd say the new utilities of the future in terms of stable, consistent growth, just because of demographic trends.
Yeah, absolutely. Understood. You have Danaher and United Health Services. Tell me about those two names.
We like United Health Services because they effectively administer a bunch of hospitals and healthcare facilities. So we do see some growth there. Danaher's a bit different in that they sell instrumentation services and they also do a bit of R&D. So Danaher's a slightly different play, and we find those two to be somewhat diversified from a revenue standpoint. I love healthcare a lot as a sector in that you can find a lot of, I wouldn't say uncorrelated, but less correlated bets, in that you have companies that, while they're exposed to the same macro trends, they do very different things, and you can kind of view them as more independent bets than making out what I call mega cap tech bets, where diversification is very hard, correlations are very high, and you're just effectively making one bet.
15 minutes
so
per hour.
You're wrong versus trying to harvest edge by making a bunch of smaller bets that are less correlated, but it's still easier.
Like this inverse head and shoulders here.
Right, understood. When we talk about ESG, what do you want people to know?
This inverse head and shoulders on a longer time frame.
The first thing is values alignment. Even though we run a product that has ESG on the name, we think the term ESG can be somewhat misleading, as it's anything and everything. We actually state which values and criteria we use in a given industry group and a sector. So what we want people to know is that, no, it's not us saying, hey, I'm going to go ask a bunch of random analysts how they feel about this, but we're actually going to look at how companies score against their peers on things like environmental performance metrics, carbon, water, energy efficiency, how they score on what are more the social or the governance metrics, workplace injuries, fatalities, worker turnover, board and management diversity, regulatory fines, legal actions. So we actually look at all this data
bouncing up their view off there
to make a score. And what I think is, by having clear criteria and being very upfront with how you're going about doing these things, it kind of demystifies the debate versus ESG being anything and everything,
only up 6% now.
Straw man to attack.
All right, thank you for that. Kyle Backasoon, thank you. Portfolio manager of the Hennessy Stance ESG ETF. Thank you. Still ahead, we'll bring in our panel to discuss what they are watching for. Amazon.
Google.
Earnings are due out shortly. What we need to know about some of these names, these tech-related names, coming up.
Yeah. I don't know when he sold it, but yeah, it's not one I'd try and hold through earnings, or even up to earnings, because you're probably gonna get profit taken before earnings. I'm out of that long. Much chop.
All the retail data throughout the quarter was generally pretty good. So I expect the quarter to be good, and it's kind of like, where do we go from here? And I just don't think there's a reason to get overexcited.
Right. Logan, what are your thoughts? I mean, you're right that the setup is there for Amazon.
Wait a minute, what's this?
Now to propel Amazon even further?
Oh.
Yeah, I mean, I think one of the good things and the positive things for Amazon in this quarter is the expectations have not risen. So even though we've had great economic data,
Mullen still looks good.
some really good information come through on the economy and
Zoom out on that chart, looks nice.
The expectations for this quarter for Amazon have not risen. So 35 to 34
Not to
cents
say I
per
wanna
share in
ride it,
earnings.
but
I think it's going to beat that. I think
been
Amazon,
good.
the set is there technically. I think we could see a nice
Not
move
as good
here.
as Rad.
Obviously had the fantastic home run out of the park move that some of these other mega tech names have had. It's not at all-time highs or even near that right now. I think that the stock is setting up and could have a really nice run.
You talked about the AI advantages really in the supply chain, and that they also have maybe an advantage on the labor side of things, Logan. Just a quick thought on that.
Yeah, I mean, the headwinds that you're looking for whenever looking at this stock is looking at things like the supply chain, looking at how inflation's affecting it, looking at how the employee
Yell's holding up
is
really well
doing.
too, 30% on that one.
Generative AI is obviously a big part of their business model moving forward when you talk about the AWS space. So it's going to be interesting to see how it goes on the consumer side and on that AWS cloud-based side. But I do think longer term, there's going to be advantages for Amazon in the supply chain and in the employee side of things, the labor side of things. I think that a generative AI that can happen can improve those processes over time and ultimately help the company.
Right. Dan, you really talked about
Let's see
Amazon
if Spy can break this level.
and a good quarter, but we have seen some
I didn't like that chop earlier.
growth there.
Yeah.
Is that? But that's been such a bright spot for Amazon, right? Where you have a fair price target, fair value here of 137 for Amazon. What gets it there?
Well, I mean, I think we were pretty much right there just a couple days ago, right? I think we removed it from our list at $133. So AWS for years now has been, I think, really the growth driver for the company. More recently, they broke out the advertising business, so that has been pretty exciting for investors to look at. But you're right, AWS is slowing, and so it was 16% growth
6
last
minutes.
quarter. It was in the 30%,
Hour.
a year and a
All right,
half
it did break
ago,
that
so
level.
that's a pretty dramatic slowdown. And then they said
Did
in the
we get a little
call last
pullback here?
quarter that it slowed in April to 11%. So I think that people are expecting around 10% growth for the quarter, and that, for your biggest, most exciting business, and if you're saying the public cloud is still in the early stages,
We're getting a MACD crossover too, maybe.
It's going to reaccelerate in the next couple of
Got time.
quarters.
I'll wait.
Comps get easier, but it's still, it still gives you pause.
Don't want to buy calls at
what if
resistance.
10% growth this quarter becomes 8% growth next quarter, and then maybe
You like this inverse head and shoulder still, though.
After that, I think investors are really
This
going to
longer
be
time frame
struggling
inverse head and
with,
shoulders.
paying up to these valuation levels for Amazon.
How about advertising? That's another area you were focusing on.
Yeah, I mean, the advertising business has been great. It's certainly been better than it's been at, say, the other large cap internet peers. So that's a business we're really excited about. And between AWS and the advertising business, that is driving growth overall and producing basically all the profits. So there's a lot to like there. And plus, they're rolling out more formats for the ads. They're sort of expanding to other categories within the Amazon properties. So I think there's a lot of growth there. I think you're going to see something around 20% growth this quarter. That's significantly higher than the corporate average. So that's something we're bullish on, and I think that also will pick up as we sort of come out of this malaise that we're in now. But I think the key question is that in 2 quarters, or is that are we going to have a recession? And that's above my pay grade.
All right, understood. Logan, do you have other favorite sort of tech names that we should keep an eye on? Your favorites are what?
We're really watching closely this earnings report, Apple and Amazon tonight, as everyone
Back at
is,
1728.
because it's going to give us a good view of the rest of the economy and what the
Up
rest
the
of the
morning
economy
site.
looks like, as far as the things I mentioned, supply chain, as far as how pricing is, as far as how
Back
healthy
at 68
the consumer
cents.
is. So we'll obviously be watching that very closely. If I had to go into
68 cents might not be
areas,
bad.
obviously there's a lot of names
I'm
that
gonna-
we're
we'll
looking
keep
at
watching
right
this
now.
next
This
5 or 6
pullback, I
days.
think, is good and
I think
is
it might be-
healthy, and I think there's going to
might
be
not be
space
over.
in the tech area that is going to be available, but we just got to kind of see how this pullback transpires and really watch these earnings reports closely tonight to
Brad
see how the
creeping
overall
up there.
Logan Gilland
Try
of
not to
Jewel
scare
Financial
anybody.
and Dan Romanoff of Morningstar. Thank you both for being here. Great setup for Amazon, which is out shortly. Looking forward to that and more after the bell. Thank you so much, both of you. Thanks for being with me here on the watch list. I'm Nicole Petalides. Keep it right here. Market on Close is next.
Did get a push in power hour. Get that beautiful green end of day. BEA beautiful. Brad a little bit higher there, slowly. Mullen hanging around BWAP. GME is up 0.9. Barbecue's down 2.4. GNS may be finding some support here. Need volume to come in and rip back up to VWAP. That'd be nice before close. Get us above that resistance. Look how high VWAP is. There was no volume on this drop. There you go, GNS. Dish is up 1.5. We're gonna go for power hour. Hour. Little bouncer on GNS. Now power hour. CNS is closed. GNS is going to go. Confluence 16%. Nikola back to VWAP. Once boy. Yep. Life's objection is in docket form? In the docket? New docket mentions shorts? Wow. And how smart of a play it's been for them? How they've done a commendable job shorting this stock so successfully. Yeah, it's kind of interesting. The judge, because he said he's not going to take a look at it. He's not going to consider it since it wasn't formally submitted or whatever, without a signature and without a name or anything. But then proceeded to read it and start asking questions on it. So it turned some clocks, I think, in his head. Failed objection letter. Come on, GNS. A ways to VWAP. We're climbing. The air is nice and clean up here. I might hold some of these calls till tomorrow. Given that we're kind of holding this right shoulder. This inverse head and shoulders. We have that gap up there. And it's a Friday. If I could make them free first, that would be neat. It seemed like the questions he was asking were sparked from what was submitted, though. He didn't formally... Sorry. buy, undecided, just chopping around. Okay, I pulled out. I'm probably done. Too much trading. Missed this long. Should have trusted my instinct on that RSI divergence and that engulfing candle. That would have been a great long. Got this short. Got this short. Or no, I didn't get this one. Got this one. Chopped in there, chopped in here. Not many good setups. This long. Did say this long, but it wasn't great. This short. That's it. Still might be another one before the end of the day, but it just gets risky towards the end of the day.
And the drop in Norwegian this week, the market feeling a little bit antsy about that reopened trade. Certainly some things here that could put a damper on the bullish momentum, but Apple oftentimes is the most important stock for this market, and ahead of employment tomorrow, it's going to be a very busy 24 hours. Thanks for
oh yeah, huge earnings after hours, I forgot.
Let's bring in Caroline Woods, our senior markets correspondent, joining us from the New York Stock Exchange. A big, I think, important part of today, Caroline, is that AMD held its own. This key semiconductor bouncing back. They got a couple new chips out. I want to make sure we don't overlook this story before we go into full-on Apple mode.
Hey there, Oliver. Yes, AMD, a surprise winner today. It, of course, had fallen earlier this week after earnings. Really, the revenue outlook came in soft, especially below consensus at the midpoint, and had seen shares sell off. Still technically negative on the week, but inching closer to that unchanged line. Shares up about 3.5%, 3.3%. Right now. Did get a positive note and a price target hike from Benchmark. The analysts there saying, we believe AMD is among the best positioned companies to benefit from the tech sector's broad macroeconomic adoption of AI. In turn, he reaffirmed his buy rating and raised his price target to 145 from 108. You can see AMD is right around 113 right now. There's also news, as you said, that it's launching new graphics cards. It's adding Radeon Pro W7600 and W7500 workstation graphics cards to its product line. Those are available as of today. They can be used in things like computer-aided drafting and building information modeling, some more mainstream workloads that don't require a crazy amount of graphics memory, so they're more mid-range GPUs. Both are, well, I should say the Radeon Pro W7600 is going to be $599, while the W7500 is $429.
Red candle on SPY.
Could be giving shares
That's
a
cruising
boost
back to
today
VWAP.
as well. So as I said, shares up about 3.4% right now. You take a look at NVIDIA. NVIDIA actually also higher today, up about 0.6%. The overall stocks, though, is modestly lower. And should note that AMD now officially positive on the week. Still negative on the month, or I'm sorry, positive on the week. Yeah, it's still technically negative on the month. We're only a couple days in because Monday was, of course, July still. But, you know, breaking even now after kind of a sluggish start.
Holding $110. Really important. It's where the stock was before it gapped up on NVIDIA's earnings back in May. So that's the key level that we talked about yesterday. We're watching here today. $110, that really important level to hold. It's doing it. It's been here many times, so it's not breaking down technically. You get a couple new products in the mix as well. Kind of a nice timing there for a little strength. Now, let's go to the Expedia side real quick. Major sell-off. Talked about it this morning, but think it also deserves some more attention because airlines are down 2.5%. Other than United, that group has been getting creamed too lately. And then on the back of Norwegian earnings, it seems like the market just went into a sudden panic about how long the consumer runway here is for travel spending.
Yeah, we're seeing a lot of weakness across the reopening trade at this point. I was just taking a look at my watch list. Every company aside from Six Flags is lower today, including Expedia. Shares off about 16% after earnings, a little more than 16%. And when you actually look at the numbers, you wouldn't necessarily think that you'd see such a dramatic sell-off because they actually came in pretty mixed. Earnings beat, revenue missed, but gross bookings also came in soft. So you can see 289 easily topped analyst expectations in terms of EPS, but revenue 3.36 just barely missed analyst expectations of 3.37 billion. That was a rise of about 6%. Gross bookings did rise 5% to 27.3 billion, but that fell short of expectations of around 28 billion. Should note lodging bookings hit $19.2 billion. That was a record, but they were lower than the first quarter, so a sequential decline, and there's some concern that that could continue to soften. Expedia did say, though, that travel demand remains strong. Travel's a top priority for its customers, but it did note a softening in prices in both domestic air and North America. So could also be some of the commentary around that that's weighing on shares. I will say
back to
Expedia,
VWAP.
in terms of forward-looking commentary, did say that Q4
Is
will
this
see
still
a
a
more
handle?
meaningful acceleration of
Could
top
be.
and bottom line growth.
Could all just
but
been a
it seems
handle
like
for this inverse cut.
investors sort of ignoring that upbeat commentary
Should we
there.
still come
And
back with a
also
break of
Airbnb,
VWAP
we're
here?
continuing to see weakness there. We talked about that this morning as well. Airbnb and Booking Holdings, which are both competitors for Expedia, of course, with the Vrbo brand competing with Airbnb, and then Booking Holdings, obviously a direct competitor to Expedia. They're lower today as well, ahead of earnings. Airbnb's off about 3%, Booking Holdings off about 2%. Keep in mind, these are all companies that had done very well so far year to date. Expedia only up about 13% year to date, but you take a look at Airbnb up 64%, Booking Holdings up about 40% year to date. So the bar is pretty high heading into those reports.
Yeah, indeed. Good reminder, we got Booking tonight too. Don't know if we're going to get to that one, but if there's a big move, we'll certainly keep our eyes open for it. Airbnb this afternoon, pressure is on. All right. Thank you very much, Caroline Woods. Let's continue the tech discussion and what's going to move this market over the next 48 hours, which includes employment tomorrow with Mark Lopresti from the Strategic Fund. He's a co-managing director. Mark, welcome back to the show. So as we go into the weekend in a little less than 2 days from now, what do you think we're going to be talking about as the main driver of this stock market?
Well, Oliver, it's always good to be with you. Sorry that I couldn't be there with you in person. And by the way, I loved your last segment. Remember, it was about a year ago, almost to the day, that we talked about how that Summer of George last year might be coming to an end. I got that call totally wrong. It took another full cycle in summer of 2023 for consumers to run out of steam when it comes to spending on leisure travel. Not surprised at all to see all of those travel names taking it on the chin with that forward-looking guidance. But what I'm most interested in, and what I think is going to be the biggest overhang in the market for the foreseeable future, is what's going on in bonds.
Yeah, this was the
treasuries.
handle.
We've got some pretty
Just with some
interesting,
chop.
pretty dramatic, and pretty unique things happening that combined could lead to some pretty significant pressure on stocks, and I believe is part of what's contributing to the end of what was that fantastic July summer rally.
Look for some consolidation, some bounce to enter. Not going to chase the red candles.
Now is the potential surprise factor. The 10-year making a new year-to-date high. The 2-year a little bit behind it. Is there anything notable in that lagging nature of the 2-year and the kind of quiet dollar still? Market maybe saying the Fed can still hold off a bit?
Yeah, so I think some of that is based on hope that the Fed may, seeing these figures and seeing what's happening in the credit markets and the treasury markets, as an indication that maybe we don't need to go another 25 basis points. I don't think we get another 25 basis points in September. I think we get another pause or skip. Maybe Jay Powell calls it a skip again and another Freudian slip this time, as he did back in June. But I think when it comes to October, we've got another 25 basis point hike in the offing. And against the backdrop of what's going on, right? The 10-year spiked as a result of the Treasury's announcement to sell another $103 billion in bonds at upcoming auction. And the U.S. budget deficit running around 9% of GDP. Oliver, at 5.5%, if that rate holds, as I think it will, until at least the second quarter sometime before the Fed starts cutting, we could be looking at another trillion, an additional $1 trillion just in interest payments associated with that national debt, which is going to be, of course, at an unprecedented rate. What does all that mean? All of that means is further credit contraction, credit being more expensive, treasury yields going higher, and being perhaps a more attractive place for investors to park their money. It all translates into some pretty strong downward pressure on equities.
You are in good company. This exact same time yesterday, Unlimited Funds' Bob Elliott was laying out a bond bear case. Sounds pretty similar. What's I think telling is that it is, I would describe, in my own kind of read of our guests and the market action, but also the commentary, is that this is still a pretty contrarian view. The general consensus view that I see is still one confident and disinflation eventually turning into deflation in a market that still is pretty persistently hoping for cuts. It's almost like as long as the market hopes for cuts, we can't ever get them.
Yeah, well, listen, that's absolutely true. And by the way, I noticed your tweet earlier, which I got a great chuckle out of, that you don't know that you'll see the Fed cutting in your lifetime. And you're a pretty young guy, Oliver, so that could be a really, really long time.
I'm only half joking.
Yeah, well, there you go. And listen, this is, I don't disagree with you, and I'm not trying to suggest that this is a bombastic and an apocalyptic view, although there are some out there that are saying the big credit event is coming, stocks are going to get crushed. Look what happened the last time the U.S. got downgraded, going back to August of 2011. And look, for those of us that remember trading during those days, the market went through a pretty rough patch through August and September. I'm not calling for an apocalyptic event, Oliver. What I'm saying is you got to keep an eye on the bond markets. You got to keep an eye on treasury yields. You got to keep an eye on where the professional money is shorting and going long based on duration of this paper. Because as I said at the top of the interview, this is what's going to weigh. This is what's going to be that counterbalance against what is, notwithstanding some conservative forward-looking guidance that we're getting out of a lot of companies reporting. We're sort of halfway through this busy summer earnings season. This is what could be the contraindication, as they say in medicine, to what a lot of people like my friend Tom Lee at Fundstrat thinks, where the S&P is going to wind up solidly in the green at the end of the year. This could be that cold water that keeps things trading in sort of the range that we're at now and possibly even further to the downside.
So the market sensitivity from 2022 with relation to bonds coming back into play here. The earnings season so far has been pretty choppy for the tech stuff, as you mentioned. Early on, it was pretty favorable to the banks. We had a real nice comeback in the regional sector, and that group's actually higher today, too. Where do you think the risk points are, Mark, if we do get a blowout in yields? Does the market look at it as a tech problem like it did in 2022, or does it look at it as a regional bank problem like it did 5 months ago?
Well, I think the market could look at
average down your 446s. When, just now?
And that was actually that data point relative to the last significant the downgrade of U.S. debt, right? And if you look at what happened that summer, it was almost to the day, by the way, Oliver, that you saw some pretty significant downward pressure on equities that lasted through August and into September before we saw a little bit of a pullback. Equities
end of day average
the green
on
but
dailies.
It was choppy. And look, I think what all of this
is the way.
The data, I'm a data guy, co-founded a company called Battlefin, which we talk a lot about on the show. I look at these as data indications as what could be weighing on stocks. But when you combine that with what's happening with household and consumer credit, man, that's a picture that just gets worse by the day. There was a report out on Tuesday, I forget who reported it, that 40% of U.S. adults have less than $1,000 in savings in the bank. Credit card debt at an all-time high. We crossed that $1 trillion mark a few months
going
back.
Long.
That's why you're seeing all of this forward-looking guidance in this earnings season pretty conservative, pretty negative out of the companies that rely on consumer discretionary spending. That consumer discretionary spending is got to stop. I think this is where it stops. Not just for the travel.
Jeez, my filter's so slow in here.
But consumer discretionary related names in general. That combined with credit contraction, more expensive borrowing for corporations across the board, that all combines to some pretty significant downward pressure on equities. And it's just sort of those historical trends that we've seen happen in the past that we can't deny the possibility of recurring again as we go through Q3 and Q4 of this year.
Very well argued case for the market to run into some resistance here. Mark, thanks a lot for taking us through it.
Always a pleasure, Oliver.
Yeah, great convo. Mark Lopresti, co-founder and chief market strategist at
And I'm out.
Battle Thin. Coming up, let's get into Amazon in some detail. We'll do very specific previews for Apple and Amazon. Let's go first to the cloud.
Bounce off of 450. Oh, nice. You green on him now? Yes. Man. A bummer. Bummer, man. Tomorrow. Back tomorrow, GNS.
This stage, it's really hard for them to, not follow the U.S. economy. And if you look at the good side of the U.S. economy, there was so much purchasing during the pandemic. Amazon's going to feel that retrenchment. Not as much as other people, but they will feel that retrenchment. So we're definitely looking at profitability here.
Okay, the online stores. Flat from their last quarter. Going back, rewind the tape a little bit, just to iterate a few points you made there. Flat compared to a year ago. They were down from 2021. The AWS, which still grows and is their big margin contributor.
Maybe not tomorrow, Julian, but
also slowed its growth. So is the market just kind of getting its head around how things are slowing?
Could see it have some continuation next 10 days or so. Of course, I would have been much more confident in that if it held
I don't know if they need to see a
up here,
pickup.
but
I mean, again, looking at AWS, I think everybody in the market's expecting slowing. That's what we're kind of hearing coming out of the market before Amazon is reporting. So again, there, I think it's, I mean, I hate to use the AI because everyone's using AI, but I
basically you don't want to fall below here.
Be looking towards commentary on how
Below
they're
this
setting
low
up
from
vis-a-vis AI.
yesterday.
A little bit different
55,
ways of going about it, but
whatever that is,
they have
55
the
cents.
biggest roster of clients out there. They have kind of a how-to
That's probably where I'd trim.
to help their clients navigate AI. So I think any comments vis-a-vis AWS
But
and
you have to be
AI
careful.
in a positive light.
It might edit, might be a false breakout, make like the inverse head and shoulders below it.
But looking at the kind of here and now and what's going on
But if
with
it's
their
not,
revenues at AWS,
it uses that back as resistance after it drops below it.
Slow.
Then you might be seeing lower lows here.
Conference call again, kind of with our comments
after
that they
30
are part
cents.
of the U.S. economy. Their client base is slowing. They're seeing a slowing. It's gonna impact their numbers, and we're anticipating it will impact their numbers. Now we're still looking for 10% growth there. It's going to be interesting to see if it's optimistic. We're down to 5% in the third and fourth quarter. But I do think the AI factor is going to be big as you look at AWS. And then again, as you look at the e-commerce business or the e-retailing business, it's all, in my mind, about the EBIT margin. People are putting a lot of pressure on this company to bring home some.
Well, you gotta be careful getting back into something you've already made money on.
I do think they're going to make some progress there.
Okay.
Easy thing to do, but
on the fact that we saw a couple quarters where that EPS went negative, and it was
too easy to get back in too quick.
Amazon losing money.
Upstart looks nice still.
Part of those too, they had some pretty big losses in the Rivian investment as well. To the point about AI, though, given how much of a buzzword and a hot topic that is right now, do you think they have to meaningfully change guidance and attribute it to that? I mean, it's been up a lot with all the other AI stuff, but you don't really hear it in the same breath as being like integral, I don't think, as it is to some of the chip makers, some of the other software companies we've talked about. How important do you think it is?
I mean, it's going to be important to them, right? As they lean into their huge roster of clients, and the clients are looking for guidance here, and they actually have instructions and on their website, and so I do think it's important to Amazon. I just wouldn't dismiss it because that's where the economy is going. It's important, honestly, to the e-commerce side of the business where they're using machine learning and whatnot to automate those facilities. And something we haven't touched on yet is that as they do that and use whether it be AI or automation and processes, they're really lowering their costs to move an item to your house. So the goal here is not only to lower the cost, but to increase the speed. And we actually think they actually told us a little bit about that a couple of days ago. They're really starting to hit some goals here. And thinking through this cycle, what that means is Amazon's going to be grabbing a lot of share. And Amazon's not the only one doing this, by the way. Walmart, you got two behemoth companies that are automating using processes to improve the efficiencies of their big distribution facilities. And that's going to really put a lot of pain in a lot of other retailers. So that's why that whole thing about profitability is important, but also anything they say about speed of delivery. So they're now driving delivery times down to, same day, forget next day. The more they do that, the more likely we're going to see them use price. And we just put out a report where they were running some big promotions with Bosch tools, priced way under the competition. We're going to see a lot more of that. So AI is important at AWS, but we can't forget it's important to what's going on with the e-com business as well.
100%. In fact, it always kind of struck me as odd that Amazon, at least kind of the way we've had a lot of our guests talk about the AI trade being very focused on new products and the hardware needed for it. Amazon's entire e-commerce business is built on AI-driven factories. I mean, we've been seeing the photos and the videos for years about how they do everything, and it's all some form of AI, maybe not the language learning models necessarily, but I mean, it's core to the business, and it's incredible smooth experience for the most part. And returning stuff, getting stuff, fixing stuff. I mean, it's truly a very good point I think you make that goes underappreciated. Thanks for the thoughts, Scott. Good stuff. Appreciate it, Scott Mushkin, founder and CEO at R5 Capital. Apple up next. Tom spotted a pretty big trade going into the report. and it's bearish.
Target 1728, is that the one with life relationships report or findings or whatever? Air is nice and clean up here. Genus likes to be the dirty air. See it later this week maybe, or next week. 3:30, 30 minutes.
Is that we're going to see some gains, and it's going to be a good report, but a lot of the data, smartphone data, has come in rather tepid. Look at what Qualcomm's doing today. I know they're mostly in Android and lower priced phones, but they're also in Apple phones at this point. So it's going to be an interesting earnings event here, but we did see a put buyer in the near-term options, August 4th, weeklies that expires at tomorrow's close. They were buying the 190 strike puts. Over 20,000 of those were scooped up. Average debit of around 250, so that break even of 187.50 over the next 24 hours, about 2% below the current share price in there. Over 500,000 calls and about 500,000 puts have traded on the session. Not really out of the ordinary for Apple going into earnings, so maybe that has something to do with it. Typically, we'll see volumes start to really pump up ahead of the earnings, but maybe a muted response with the markets predicting at this point, but my guess is they better hit everything like perfectly.
Yeah, I mean, I think that big part of it too is all the shareholder-friendly activity, though. the dividend, the buybacks, which they just upped last quarter again, and then all the cash that they're sitting on. The stock is traded unlike NVIDIA and the others. I know they all kind of broke out at the same time, but it is one of a kind. It is basically traded safer than a treasury bond. Like whenever it looks like the outlook is the worst, when the economic numbers are the weakest, which is where we were basically coming into this year. Recession, everybody was talking credit collapse, major credit risks, regional banks got hit, market starts pricing in cuts, and this time around, it wasn't at first a big broad rally. It was a few of the AI names, and then it was Apple as people were piling into it out of a fear trade, basically, that, hey, I might as well just park my money here because that's where it's the safest. And so they can't show any cracks, really, in anything, to your point.
Yeah, and I think that one of the key things will be guidance, right? It's almost like this quarter is going to kind of be washed away. Maybe it's going to be mediocre with that slight decrease in revenue, but when you've got a company at historical valuations on the upside compared to what they were before, and you've got decrease in revenue. I know, they're coming out with the new iPhone 15 next month. You've got the holidays coming up. They always do really well there. But yeah, you expect probably another dividend hike, maybe an add-on to the buybacks that they've previously announced. I mean, they're the most shareholder-friendly stock out there, as they give their shareholders quite a bit in return.
Yeah. Okay. The number for services continues to get bigger and bigger, though, and that's where a lot of folks are expecting them to show they've got real growth there. Just shy of $21 billion we're looking for this quarter out of the total $82 billion, roughly 81.5. I guess we shouldn't be rounding to half a billion. 81.55 the expectation. So contraction again for third quarter in a row.
Yeah.
But very small, to the extent that if they did surprise by a couple percentage points, sales could be positive. I think the market would love to see that.
Yep. Think about this. Any other company that wasn't named Apple, 3 quarters in a row of decelerating revenue? I mean, what would happen to those with the stock there?
Right. I mean, they haven't. They've been declining for the most part.
Yeah.
So, all right. 2 other trades real fast here. Expedia. Someone piling in to bet on a bounce back?
Yep, I think so. That big move down today, 16%. They're in there buying really cheap, really short-term dated calls in that same August 4th weekly cycle, trying to get a bounce here.
Right.
I mean, think about this. The stock broke through its 50, 200, and 100-day moving averages today. So not a lot of support there, but call buyers in here in the August 4th weekly cycle, just 1 day till expiration. 103 strike calls. They bought over 7,000 of those for an average debit of just 50 cents. So that break even just above 103. That's about 5% above the current share price in there. The top of the candle, today's candle, big red candle on a chart, Oliver, the top of it's 109. So even if tomorrow maybe Apple and Amazon are good, the market rebounds strongly tomorrow, this stock rebounds to the top of today's candle on this down move, 109. If this stock gets back to 109,
bold trade.
Call volume 12 times normal daily average volume that we've seen over the last week.
Very hopeful.
Yeah.
I mean, usually big sell-offs like this, it gets sticky. Last time Expedia
bounce around barbecue.
Slammed in March, it traded down from 90 to 95. All the way through for an entire quarter, so they're definitely betting on something very unique
flushing
happening.
A bit.
On the flip side, in Wayfair, the big winner of the day, of 17%. I mean, it was a really interesting chart because there was resistance at 75. Bam! This is what happens when you breach that in a single session.
Well, this is what happens when your EPS is supposed to be minus 68 cents and they come in at positive 21 cents profitable.
Nice. Yeah.
And that's
Shocker.
that and a couple double upgrade out of Wells Fargo. Gordon Haskett upgraded it to a buy from hold, $110 price target on it. I think about this. This is my reasoning behind this. And we talked about this the other day with the team at Likefolio, that they've seen a rebound in some of their sentiment data, is the fact that people are staying in their own houses, right? Existing home sales are non-existent. They're actually negative because nobody can move, because interest rates on buying a new home are double what they were just a year and a half ago, right? Above 7% to get a 30-year mortgage. So what do you do if you have to stay in your house? Well, maybe that new furniture that you bought at the start of the pandemic now needs to be replaced, or a refresher. And what's really strong? New home sales. What do you have to do when you buy a new house, Oliver?
I like that. It's
you
a
buy
housing
new
trade.
furniture.
Housing connected
so
trade.
it's rebounding. Really good data metrics out of them. But we did see some short-term call buyers in there in the August 4th weekly cycle again. So all real short-term positioning. August 4th, 90 strike calls. Bought over 4,000 of those. Average debit of $1.50. 91.50 is a break even on that, 7% above the current share price.
Wow,
you only got 24 hours in it, but call volume call volume exploding, 5 times normal daily average volume. And remember, most volumes now are coming in these really short dated options, those day of earnings or day of expiration. So short-term positioning here in all 3 names today.
Wow, all right, nice trades. Interesting, folks taking some stabs here, a couple pretty big swings. The one on Expedia definitely swinging for the fences on that one.
Right.
Okay, thanks, Tom, and a good little Apple preview for you. When we come back, a big tech decliner on the day. Has a history of doing it. DXC often pops up on your S&P watch list as the worst performer. It's got a bad history of doing what it just did today.
Thinkorswim by TD Ameritrade.
All right, 15 minutes. Tupperware. Little pop back to the high on barbecue. 26.50. It's only down 0.45 now. Friday hanging out up here, plus 13%. GNS up 6%. Nice little pump and dump through resistance today. Look at that. So even that steeper resistance line, which is respected 1, 2, 3, 4, 5 times, it's maybe going to close above that. It's crazy. It looked like it was tapering though, and we're getting, you know, this resistance starting to form. But I was looking for the long. Did break that. Of course, it's back down below it now. Yeah, might be holding this one for a little bit. We can hold above here, and we can get some liquidity built up here for a right shoulder for the inverse head and shoulders. That VWAP way up there just got shut down. Market favors day trading. That might be a good play, Bubba. Playing earnings. But we do have... well, maybe it's kind of failing now. We still kind of have this inverse head and shoulders. But, I mean, with earnings, we don't know. Just kind of roll the dice. Apple's chart looks bearish, but doesn't really matter.
So this is the country that basically said they're going to start pulling away. They want to cut production to keep exploration at the forefront for other countries. I thought that was kind of an interesting juxtaposition to their green plans, which I never really believed their green plans in the first place. It's like McDonald's saying they're going into sashimi. It just kind of didn't make sense to me. So when you looked at that, that's when crude oil got back on the horse, and it wasn't an outstanding session. I think crude oil is targeting about $83 here on the WTI contract, and then there'll be a little bit of pullback, and we'll see. But we also had strong data out of China indication PMI figures, which is the first sort of green shoots we've seen for any sort of China expansion coming through. Those PMI numbers are widely watched. And then the factory orders in the U.S. here that a little bit stronger than expected. So there was a little bit of demand and a little bit of supply built into the rally that we had today.
Bob, at what point does crude break free of this $80 zone roughly? Where does it start to get fun for maybe a full reversal trade?
By reversal, I assume you mean up, because that is definitely a close. What we need to see here, if you're long crude oil, you need to see a close above $83, then a little bit of a pullback, and you need to see sort of 81.50, 81.70 hold. That would be the whole sort of, we're going a lot higher. We're targeting $95 now. And that is interesting because we're about to come into a seasonally weak period for crude oil. As we come out of the summer and go into the fall, it's amazing we're already in August here.
Yeah.
Well, we're going to get out of that.
We're burning
it's
up.
Still hot, really hot. But we're about to get out of that summer driving season. The speculators are already starting to plan for that. And when you see this sort of bid in crude oil coming in this time of year, it's definitely, I shouldn't say definitely, but it's usually supply-based. And that comes from these production cuts starting to bite while you're starting to get a little bit of China recovery. A very little bit, but a little bit. By the way, India has been buying like crazy. U.S. exports are up, and U.S. exploration dollars looking for new barrels equivalent underground are up by about 50% from last year at this time. But actual discoveries of barrels equivalent are down by about 42% going back to this time last year. So, and it's mostly because they're focused offshore. They're not exploring for more shale because they don't know what the environment's going to be. So the available barrels in new exploration is way down, and that's weighing on the sort of bear side of the case as well.
It sounds like there's some pretty strong evidence here for kind of both sides of the supply-demand equation to start to bend.
Closed one of the positions on the data farm.
The bull case may be winning out, but we'll see at $83.
Just send out the alert to the data farm members.
Always like the level to look for. Bob Ichino, Pat Trading Partners. Thanks, sir. Coming up, let's close out the session with the Charles Schwab team. Got Randy Frederick and Kevin Gordon joining me to talk about the session and what to look for tonight, tomorrow, and into the weekend.
Am I close to red, really? Proper pump and dump on this thing today. Oh wow, yep. Red to green to red. I mean, this stock is heavily manipulated and shorted. I don't want to use my day trade. So stupid. Barbecue, there you go. Green, 1.5%. 10 minutes of Fugazi's here. We got 27 cents on it. There's 3% on it. See if we can build an inverse head and shoulders here with a break of this level. I mean, that would probably happen tomorrow or next week. Hope you don't either, Cameron. Genius, dude. Wow. Like everybody's waiting for that break. And they just pumped it and dumped it.
People still have money to spend, and they look at this as every dip here looks like a buying opportunity going forward, I think, for some of these traders.
Okay, so we've got new habits that have formed here over this 10-month rally since October last year. Isn't that amazing? It's been 10 months since the bottom in the S&P 500. Feels like we were just ramping up, talking about breath being light and all that stuff. That was 6-7 months ago now. I like the way you put it in your note, Kevin. Now it gets real. Tell me what you mean by that.
Oh, well, it relates more to the inflation story and kind of this, we've been thinking about it a little bit more in the disinflation process being in two stages. I mean, this has to do a lot with kind of the most recent Fed meeting, citing what has already kind of been built in from the goods disinflation part, and then now what is left to go. And this brings in the focus for tomorrow for the jobs report, which is the services part of inflation, but also now everything related to wages. Because now I would argue you're kind of going to start to see what are the actual effects from what the Fed has already done from the tightening cycle, and how much of the wage inflation is kind of lingering on its own and not really related to what has already happened in the economy. So I think it gets real in the sense that you're going to start to kind of figure out what is not directly related to kind of the supply chain stress unwind that we've already seen, which was most notably seen in the goods segment of the economy.
Just get little pumps liquidity
Carrying over to services, and then most importantly, from the Fed's perspective, services, everything ex housing. That's going to be the focus.
Still a downtrend.
So I think
Can't look
for
at
the
it
remainder
intraday.
of the
Just
year,
zoom
and
out.
then definitely
See what
as you
it's
turn
doing.
into 2024, that will be the focal point for inflation and for the broader economy.
No TC stock.
Stocks looking sensitive to bonds. Randy, 2 days in a row, our guests at the top of this show have been pretty bearish on bonds today. Marco Presti yesterday, Bob Elliott from Unlimited, talking about how the 2022 regime is going to come back. Do you see that sensitivity here so far?
They're still there a little bit. Now, there is some pretty solid level of resistance on the 10-year up around that 433 level, because that's where prior to that, you'd have to go back several years to find a higher level. But I think once we get up to that level, which we're getting very close to, we're probably going to see it pull back just a little bit.
5-finger slap coming up.
This is a near-term phenomenon, right? So what you see overall is you see the likelihood that interest rates are going to come down over the long haul. Now, tomorrow's jobs report is going to play a big role in this, and we've got some very interesting dynamics going on because we've seen fewer job openings, we've seen fewer layoffs, but at the same time, non-farm payrolls have really not risen hardly. I'm sorry, weekly jobless claims have not risen hardly at all.
Hey, Macaron. Docket 1728. I haven't read it, but I heard it's life relationships.
I'm expecting at least a little bit
email
of upside surprise.
that's just brought up in the docket, I guess.
Just in the near term, and then maybe we'll see a little bit of softening. So what we want is kind of what we got today, which is data that is not too hot, not too cold, pretty much sideways. That'll keep everyone's
big earnings after hours.
But a potential additional rate hike in September, which right now is kind of off the table. But we got a lot of time before we get to that point, and the data can certainly change the outlook.
I think that fits very well with what we were talking about at the top of the show in my movers, which was yields going up, but the dollar pretty calm still. So we had this bounce back in the dollar, but not quite the 2022 regime where yields were blasting off and then the dollar was running with it. And everyone was recalculating the Fed to be much more aggressive. Maybe that could be coming, but perhaps not yet. Kevin, you're right that the Fed pause shouldn't be a key part of one's macro thesis right now.
Yeah, because there's not really anything average about it when you go back in all of the Fed tightening cycles and then all of the pauses. Because, the upside, if you go, just 6 months after the pause when the Fed was actually done raising rates, the max upside was 20%. The max downside for the market was down 20%. And then you extend that out 12 months after the pause, the max upside was 30, the max downside was 30. So, you have a huge range over time, and you can't just use the pause to say
lows.
Everything's fine, buy stocks, or everything's not fine, sell stocks. You kind of have to consider the broader macro, backdrop. And in today's environment, in a cycle that is probably the most unique we've ever seen, you have to pay more attention to
I'm still holding Teladoc.
And, particularly the yield setup that you're talking about.
I think,
just kind of this rapidity with which the yield curve has steepened. Whether you're looking at
happy with that
or
one.
The spread between the 3-month and the 10-year.
Nice.
It's been pretty rapid over the past few days, and not. Historically, when you go in back and look in
we've watched Barnes and Noble or
it's not
Boned
to see the 10-year rising and leading us out of that inversion. So it would be sort of an anomaly.
I got
historically
the lines drawn on there already.
Inversion of the yield curve, if that were to happen.
You've got earnings, so nothing really to talk about until that comes out.
The past few days has been notable that way.
Get a break, prefer to retest for support, or you could try and dip by it if it comes down to retest here again.
So the front end comes down really fast, right? So this is kind of like the market suggesting we could perhaps
basically
grow
it
our
on
way
there.
out of it.
Yeah, it could be. I mean, you have to think about
coins after hours. Yeah, a lot of big ones after hours. You get a big after hours move on the SPY.
Sustaining itself above a 4% range would be the pre-financial crisis expansion, which was relatively short.
And SPY options you can close, I think, 10 minutes after close,
as the beginning of that expansion,
which you might want to do if it goes in your favor, because you can always get it to reverse
inverting by the 10-year
by the
rising.
morning.
It was just that the 10-year was above 4%. So you
barbecue's
still
up
had the 2-year
3%.
and short
There
rates
you go.
tanking. So that would be the difference this time, is if they just stayed elevated. So I think it would definitely be different if you had both staying in kind of this higher for longer territory, but the 10-year was rising at a faster rate
Fish 2%.
and surpassing the 2-year that way. Way too soon to make that call.
Rad,
but it
14.
would be consistent with higher structural growth in the economy.
All right, nice. I like that. Randy,
Barbecue
fast,
will not be riding any waves with
perfectly the next
Amazon
24
and
hours that
Apple,
pullback develops,
in my
what could
opinion.
be on the radar for VIX? What do you think is possible?
It's not had a positive beta or negative beta since OTC, even before OTC.
16 when we got the debt ceiling deal back on Central, and it literally has been below 16 every single day since then until yesterday. And then we've seen
five-finger market slap coming in.
So it tells me that people are finally getting a little bit sort of cautious or a little bit uncertain about the future here. We could certainly, if we got a really strong jobs data tomorrow, I think that could be a sell-off signal for the equities. And I think we could see the VIX up around 16, 17, 18 again without any trouble tomorrow, I believe.
All right, thanks a lot, guys. Great stuff. Kevin Gordon, Randy Frederick, much appreciated. 2 minutes from the bell and Amazon earnings. We'll be right back.
All right, here it comes. SPY down 24% on the day. Got a lot of earnings after hours, should shake things up. Got a bearish MACD right under the 9. Big engulfing candle still. Looking like it wants to maybe keep coming down before it bounces. A longer time frame, but I would definitely say this is a top. Oh. Yeah, that's the SPY. Nice little pop on RAD today. Retraced all the way back to that 61.8% golden pocket from this big move up it had yesterday. Have that. Retrace there. Set up that bull flag yesterday. And then made this little inverse head and shoulders today. With yesterday, actually. And proceeded to rally up. So looks like it's in a bigger cup here. Hit that high, injected right up there, and this is the handle that's just getting built, and now we're on our way back up to the highs. So could get a break of this straight away when we get back up here, or potentially we reject here again and have to build up some more liquidity, some more momentum for the bulls. But yeah, it's looking solid on RAD. I like it. GME, a little bounce today, still in a downtrend. It did get somewhat of a bounce yesterday on a support. I think it could still keep testing this, and I don't see reversal until it really shows breaking some resistance. Be this one and some sort of bullish pattern setting up. But at this point, without the markets looking to, seems like it'll probably drop through this level. Maybe not without a bounce first, back up to test the resistance. And market might do the same, really, before we keep coming down. Tomorrow's Friday, have earnings. Might get a good earnings and a rip. This gap very well could get filled tomorrow or sometime next week before we keep coming down. BBBYQ still is downtrend. Did end up 3.25 on the day. So as it moves down, every time it sets up an inverse head and shoulders. Just needed to build another shoulder and break out of this downward trend, or to change its downward trend. So nothing new there really. Yeah. And I don't know, we had other plays. Costs. Cost was pretty flat. I still like the cost chart. Still waiting for it to make a move. Nice little grind up. Might have a big day here at some point, hopefully. Proterra down 3-3. This one might not be getting a pre-earnings run up. Might end up closing out of that. Mullen had a nice actually bottoming today with some volume. Got an inverse head and shoulders there and a break on this resistance. Well as this resistance. And look, it even bounced on there. Use that as support. End of day and right here. Little intraday head and shoulders. But as long as it stays above those resistances, this could be back in an uptrend. You know. So let's see. You could say this just built a bit of a cup right here. This could be the handle. You have a much larger cup, of course, back up to 32 cents, which it might be starting to build. Gosh, I hate Mullen. GNS slapped us today. You guys saw the TA on GNS. Broke through lots of resistances. Act like it was holding the support. And it didn't. And it didn't. So we'll see on this one. Stop loss for me would be down here below this support, 54 cents. I'm fine to hold it for a bit though. Yeah. Yeah, see what goes on with that one. Does DWALK rip when Trump goes into the court? Oh, if he gets if it gets pardoned or something. Predict a huge dumper pump on IP. We'll see. Buys up 0.25% after hours. Someone's getting reported. Thanks, Publicious. Who's reporting after hours? Apple. Someone's reporting. Getting that move on spies from something.
I think it still is slower growth, but if it beats the analytical percent
Oh, Amazon.
mark, which just you both pointed out that it did, that's super. Stock's still higher. It's still up close to 7%. If you see margins improving too, I know
Yeah, Amazon's up 5 after hours.
in focus. They had given strong guidance in their last report.
All right, I've got to take off. Thanks so much, guys, for the support today. Tasty. Appreciate that coffee today. You so generously gifted. Thanks, guys, for your likes. 42 on the day, not bad. Appreciate it. Thanks, Psych You Up. Thanks, Adele. Or Aglel. Thanks, Gamer. Thanks, Publishers. Thanks, Mohammed. Thanks, Guts. Thanks, Grumpkin. Thanks, Julian. Thanks, Maui.
You know, double-digit
Sound better today?
AWS
Thanks, man.
growth, well off the highs,
Yeah, I've never felt too bad,
still now
thankfully.
creating a
It's been pretty nice,
foundation
so
of margin
we'll see.
and profit
One day at a
that
time.
this
It's a slow. I think it is
company
some kind of
always hoped
COVID,
to achieve, the
so it's
analysts
kind of a
hope
linger.
it would achieve. And now, so when there's a macro beat on the top
Yeah,
line
thanks, guys.
for sales,
We will see you on
get
Discord.
a little
See you
additional jump
on
top
Twitter.
of now kind of their baseline margin, because the fact that
44.
the
Well
sales too
done.
are doing really well,
Well done,
that's
guys.
kind of a macro thing, right, Kevin? I mean, that's
Oh,
just
43
what we're talking
Bubblicious.
about. The economy's been better than expected.
43.
Yeah, the last couple of quarters, AWS has definitely
I'll
been
leave this on for a
the
minute.
segment of the
We'll listen to
business
them.
that has shown some growth and has been able to try to keep it afloat, if you will. The other segments, especially when it came to sales and their online stores, we've seen that weakness over the last 3 quarters, which is why the stock was so depressed. But when you're looking at the third-party seller number on a year-over-year basis, that's actually at 18%. The street was looking at that coming in at 13.1%. So actually out of pretty much each of these segments here, online store sales, third-party sellers, and AWS, third-party sellers actually, beat them, beat both of those other segments. And I don't think that the street was actually prepared for that. So I think the sales side of this business, the consumable side of this business is definitely showing some strength. We are maybe seeing now this strength in the consumer, not only in the economic data, but now showing up in some of this retail data here. And I think right now, AWS could be around 30 to 35% of total revenue when it comes to Amazon, and they can try to split that also with the store sales as well. I think that's probably the right mix that this management team would like to see, because then that does allow them to weather the storm here, and it's not going to be as cyclical in the marketplace like we've seen some other companies that have really concentrated on one area of the business.
Okay. Important, very good description. Important also to keep in mind, a year ago, we had negative earnings for Amazon in the summer of 2022, 2 quarters in a row, and then a few that were borderlines. Time's moving fast here, but I think that feels a lot closer than it actually now looks, Nicole. When they were getting blasted on their Rivian investment, the whole market was under pressure. I mean, this really does kind of feel like 180 from a year ago.
It really feels pretty great, because every line that I'm seeing for Amazon is a beat. And so, I mean, we saw the revenue beat, the earnings per share beat, the guidance, the bottom part's in line and the top is a beat if that comes true. The third-party sellers beat, the physical stores revenue beat. It really is looking pretty great, and it's holding on. It's up about over 5.5% right now. So it's really looking like a very nice report for Amazon. And it's a surprise for Wall Street, because I think everybody was expecting a little bit of ho-hum reports from Amazon and Apple today.
Here's the icing on the cake. Their guidance for next quarter, 138 to 143 billion. Street was looking for just 138. So they're saying at minimum, we got you guys covered.
Right.
That's pretty good. All right. pretty good stuff here for Amazon. Gotta say, pressure is on here for Apple. Let's talk Airbnb for a sec. Down to $133, dropping a little bit. Their next quarter outlook also beat the expectations. Street was expecting them to say $3.22 billion for Q3. They say 3.3 to 3.4. That's a nice little beat, and there is still a booking value increasing on an annual basis. It seems a lot different than what we got from Expedia earlier today, Kevin, but I don't know. Maybe we're just a little shell-shocked from what that company saw in the stock market's treatment of their earnings.
Well, I think when you are looking at their guidance moving forward when it comes to Airbnb, they are a little bit cautious for the second half of the year. They do state that they may take some charges or operating loss due to some carry forward from the first half of this year. And they do also say that that also could be offset by R&D credits as well. So I think that's probably why we're seeing a little bit of a rocky start when it comes to this earnings announcement and the stock at this point in time. And then also looking at single-digit growth when it comes to the experiences on a year-over-year basis, modest sequential increase in year-over-year growth rates for nights and experiences booked on a year-over-year basis. So it's probably not the report you really want to hear, but you're right. I mean, after hearing what we or seeing what we saw from Expedia, you're probably getting a little bit of a pullback from some of these leisure stocks or some of these stocks that have exposure to travel, as we might be seeing maybe a little bit of a pullback here domestically.
7% on Amazon.
And starting to see a lot more travelers going abroad. And we saw kind of the same type of tone when Marriott
It says 100. Thanks, Publishers.
Surprising that we're seeing a little bit of a pullback.
You were the catalyst.
For them that they're probably seeing this small of a pullback right now.
I'm the captain now.
Dramatic drop like we saw on Expedia earlier.
I mean, maybe we should break out Airbnb finally. Maybe they should be doing their own thing. You know, I mean, if there is still disruption happening, you know, on their end, some of it's kind of been mixed disruption. There's still a lot of kind of issues with some of the reports on people's now living vacations where they like move into people's places and all right, but I think still they are the disruptor.
That pop on SPY, something else just reported.
Kind of the
also we have Apple.
To some degree in the market.
Yeah, Apple's popping.
Maybe they don't need to trade like Expedia and the others, Nicole. I mean, they got 13% booking growth still.
Yeah, I mean, Expedia really got hammered today after their report. Obviously, weakness there, and this seems to be different to me in that they had a double beat and the quarterly guidance going forward, just like Amazon, right? We said that low end was pretty much in line, but the upper end was higher than the expectations. The quarterly guidance is looking 3.3 billion to 3.4 billion, and the estimates were for 3.22 billion. So the
Plus 1% after hours.
Revenue for the quarter, for the next quarter, for Q3 is also looking good. I mean, they had been saying that European guests had been booking earlier for summer travel. They'd seen improvement in Latin America and Asia Pacific as well. And there was optimism surrounding bookings holdings, which is also coming out now and is looking like it beat. And so these are some of the names right now. Bookings is up 3.9%. So we may see, maybe we'll see a turnaround. I'm not really seeing a lot of weakness within this report. I haven't gone through the whole thing, but a profit was not going to be a surprise, but anything over and above would have been, you know, great news.
Okay. All right. Airbnb will drop a little bit, but, you know, bounce in the last couple moments. So hanging on to $135 roughly. Not a good reaction, but not as extreme as Expedia. We've also got a couple crypto-related names this afternoon with Coinbase and then Block as well, the old Square. When we look at the consumer message from Amazon, I guess maybe Block might be a part of that given the transactions and the peer-to-peer components. What do you think, Kevin? What should we be looking for there?
Yeah, I think it's going to be a mix here because we did see, you know, the earnings coming out from PayPal as well, and they weren't that great. So I don't know how much we can infer from PayPal going
I'm
into
the captain again.
Block's earnings here. I would say, and I always say this on every earnings announcement for Block, they need to do a better job because they did announce, but they're not coming into any of the feeds as of right now. But I do see that Coinbase did actually report, and they actually beat the street's expectations handedly here. We are seeing the stock to the upside here. Oliver, they did report a loss of 42 cents. The street was looking for a loss of 78 cents. And then the estimate right now is 643.36 million when it came to revenue. I'm still trying to pull that revenue number up, but it does appear that their guidance moving forward also shows a little bit of strength when it comes to Coinbase. I know there's been a lot of talk around the regulatory issues that they have seen, but obviously the
Apple's up 1%.
News for Ripple, at least
Amazon
a couple of
6.
weeks ago,
I think those are the main two.
And as well as some other
market's responding.
names that are out
I'm gonna
there.
take off now, guys. Thanks so much for your support. Thanks for your likes. Appreciate you all. We'll see you on Discord.
Coming in at least $300
okay,
million
peace out.
there, and they're also